question, but I think if you wanted to add something or agree or disagree with something, by all means, just speak up.
Okay, great. Lovely, thanks ever so much.
Well, good morning, everyone. A warm welcome to the Series B of the Open Banking Summit, which is the Open Banking Revolution KSA Summit. Thank you for taking time out from your busy schedules in joining us today. In line with the Saudi Arabian Monetary Authority, or SAMA's efforts to augment the kingdom's economic growth and safeguard its monetary and fiscal stability, Saudi Arabia's central bank has announced its plans to launch the Open Banking Initiative and go live by the first half of 2022. The initiative, in line with the strategic objectives of the Financial Services Development Program, which is the FSDP, one of the key pillars of Vision 2030, marks another of SAMA's progressive endeavors to promote innovation and growth of fintech in the region. Following closely on the heels of Bahrain to launch the progressive open banking regulation in the kingdom, this is a major step towards driving innovation and superior product offerings in the region's financial sector. Further, open banking enables offering customers improved services, which is a crucial factor for improving the competitiveness of banks, especially in an overbanked market such as Saudi Arabia, where more than 30 banks cater to a population of 30 million plus people. As SAMA has announced the launch of the open banking regulation by early 2022, the overarching question becomes, are the KSA banks prepared for the upcoming regulation? And what is the cost of not being ready? So to delve deeper into the various facets of successful open banking adoption and implementation in the kingdom, we have structured a day entirely focusing on the Saudi market to adequately prepare and position the Saudi bankers for the upcoming regulatory mandate. It's time to take the big moves to successfully navigating uncertainty, recapturing growth, and leveraging on the emerging opportunities. But before we proceed further, I'd like to share some house rules with you to keep in mind during the session. Please ensure that your microphone is on mute at all times and your video is turned off. All of the participants can post their questions in the Q&A section, and these questions will be addressed by our speakers during the session or during the Q&A at the end of the session. The recording of the webinar will be shared by email with the registered attendees who've joined us today. Please feel free to share details of this session, learnings, video clips all over social media, and don't forget to tag us at Q&A International with the hashtag Open Banking. If you experience any difficulties with login or sound, please try to log out and log in again. And if the problem persists, then please reach out to Varsha and she'll be happy to assist you. Right, now let's dive straight in. Let's begin with our first session of the day. The success of open banking lies in having a sound open banking ecosystem in place where all banks are open banking ready. There is a strong partnership ecosystem in place, as well as supporting regulatory mandates and legislations, also for ensuring customer data protection, among other integral facets. So I am honored to welcome our speakers and our panelists. So first up, we have Mr. Tony Cripps, the Managing Director and Group General Manager of the Saudi British Bank. Tony Cripps, prior to his current role, has been the Chief Executive Officer of HSBC Singapore. He has over 30 years of experience with management roles in institutional banking, treasury, trading, and sales businesses, transaction banking, information technology, and operations. Welcome, Mr. Tony. We're also delighted to welcome Mr. David Beardmore, the Ecosystem Development Director from UK's Open Banking Implementation Entity, which is OBIE, the body established by UK's Competitions and Markets Authority to enable successful rollout of open banking among UK's 9 largest banks. David leads the growth and development of the open banking ecosystem. His primary objective there is to facilitate and encourage end user adoption of products and services powered by open banking. Welcome, David. And last but not the least, we're delighted to invite the Chief Executive Officer of the Standard Chartered Saudi Arabia, Yazid Al Saloom. Yazid has been working as the Head of Financial Institutions Sales for Middle East, North Africa, and Turkey since he joined Standard Chartered in 2018. And now I invite our dynamic host from CNBC, Dan Murphy, to host this much-awaited session. Over to you now, Dan.
Hi, everyone, and thanks again for joining us today. Dan here, and it's great to be back for another session. I think, as Roma mentioned, important to point out here that Saudi Arabia's central bank really does see open banking as playing a pivotal role in the further development of the kingdom's financial sector, and also a key contributor to Saudi Arabia's Vision 2030 program, which is transforming the kingdom's economy and society. Of course, as she also mentioned, we're going to see open banking going live in the first half of 2022. So this is a really timely conversation, a really important opportunity to get a pulse check on how firms are reacting on the ground there. And we have an expert panel to unpack it for you. So Jose, Tony, and David, welcome into the conversation. Thanks for joining us today.
Thank you for having us.
Welcome.
Thanks, Dan.
So as we get underway, I'd just also like to remind our viewers that you can submit questions in the chat box, and our panelists will also be taking those questions towards the end of the session. So start thinking about what you would like to ask. My first question is for Yazaid, though, because I would like to get a check on the situation on the ground as it stands. Yazaid, do you think the KSA is ready for open banking implementation in the first half of 2022? Over to you.
Thank you, and thank you for having us. To answer your question in a short way, we've seen obviously the open banking paper and guidelines come out, and I think we can safely say that we are in the design phase right now, and we are going into the implementation phase in 2022, as you rightly mentioned. But I think it's also important to distinguish, when looking at open banking or fintech in emerging markets, one is usually used to having the mindset of looking at a Brazil or any other emerging market, and the models there are about banking the unbankable. This is not really the case in Saudi, because although we are an emerging market, we are a G20 economy. We've got a GDP of close to $1 trillion, a decent GDP per capita, relatively speaking, when comparing to other emerging market nations. And even though I would consider myself, an educated person who's worked in international banks his whole career, if I were to go to a rural area 1 hour away from Riyadh, and I randomly find a 12-year-old, I assure you that 12-year-old will be more digitally savvy than myself. Most of our population is below the age of 24. I think 25 million of our population are below the age of 30, and they are extremely digitally savvy. And everybody's already bankable in Saudi. So when it comes to the purpose of having a strong digital economy in Saudi and a proper open banking system in Saudi, this is to enable the SME market more than anything. Given that we do have a strong middle class, our SME market has been definitely kind of exasperated by these digital changes that we've seen. And digital changes are not just in banking. Payments is the latest one. We have a digital economy in Saudi. We have most our government functions are already digitalized. And it's this is just one additional piece of the puzzle.
Okay, so it sounds like an incredible opportunity. And I think you're exactly right. When you look at Saudi Arabia's young population, clearly this is a trend and a factor that banks could be tapping into. Tony, I wanted to get your take as well, because as Roma highlighted earlier, you served many years over at HSBC, most recently as the CEO of HSBC Singapore, and now you bring that experience to KSA. So it's great to have you here in the region. What's your take on open banking in Saudi Arabia versus Singapore and some of the other major developed markets that you've worked in the past?
Well, firstly, thank you. And just to say that I've been in the kingdom for a couple of months, so I hardly qualify as an expert yet. But I have spoken to ministers and regulators about the drive for digital adoption, and it is key and front and center to the strategy, especially in the finance sector. I agree with the comments made earlier about the young population and adoption being very high. I've been impressed with the groundwork that's been made. The infrastructure in Saudi is very good in the banking sector, in payments, for instance. I think there's more to come with fintech adoption. Recent announcements about attracting fintechs to the kingdom is really key. And as you pointed out, I've spent the last 4 years in Singapore, where they started a journey perhaps a little earlier to create the ecosystem of fintech, and it really drove a lot of innovation for the finance sector. And what it meant was the partnership between fintech and traditional financial services banks became quite innovative and ended up providing much better qualities of service to customers, which is the ambition for most regulators in pushing open banking. It's either to create more competition, which benefits customers, or it's to help with the management of wealth. And obviously, if you've got an open platform, you can consolidate that view of your wealth across different financial institutions. So the drivers are very positive, and I think the progress that Saudi has made so far is very, very encouraging.
And David, I wanted to get your take as well, because if anyone was watching on Monday, you'll know David gave a fantastic presentation on the state of play. And as he highlighted, he really played a key role here in overseeing the implementation of open banking in the UK. So David, I wanted to just understand a little bit more about what worked and what didn't in the UK, and what can the Kingdom learn from that UK example, which you've referenced previously.
Yeah, great. Thanks, Dan. And yeah, and also thank you for the opportunity to join the panel. It's great to be here. I've jotted down five lessons, I guess, lessons learned that I think might be useful. I'll just rattle through them very quickly. Number one, it's this is here to stay. There was some resistance in the UK when this was first introduced, but this is here to stay. We're seeing that in markets all around the world. So please don't just think that this will blow away, and in a year's time you can focus on something else. This is, you need to choose to embrace this, see the benefits that come from that. The second lesson learned, I think, is that you need to understand the whole customer journey. In the UK, one of the things I don't think we did quite as well is we had a very narrow focus. We focused on current accounts only. Really now we're struggling with how we grow from open banking, i.e. current accounts, out into an open finance where we can include savings and investments and deposits and so on. So think about the entire journey, focusing on that on the Australian example I gave on Monday around the consumer data right, the CDR approach. The third one I think I touched on Monday, common shared standards are best. If you leave the market to figure out what technical standards to apply, you'll be here for a long time because there'll be so many vested interests. Eventually, somebody needs to say, thanks for everybody's input. This is how it's going to be, and that's something we did in the UK, and I think it's sped up the journey remarkably. The fourth area, I think, is that a regulatory framework leads to faster adoption. Not everybody likes regulation, but sometimes it's better that the authorities listen and consult widely and then provide the guidance. Some countries looking, perhaps in North America and a few other examples, looking at open banking have left it entirely to the market. And the problem there is that certain large banks will dominate the agenda, which may not be in the interest of the whole economy. And the final one, I would say, as a word of encouragement to those of you in the Kingdom that are working towards this, is that if you do this well, this absolutely adds to your international reputation. When I look at other countries around the world that are pursuing this fintech adoption, this tech adoption route, the increase in sort of social capital, in economic value, is clear to be seen. So I think you have a selfish reason for doing this, even if you forget all the other benefits that you have. I think it's good for your economy that you pursue this progressive and this sort of progressive approach anyway, and adopt it.
Okay, really interesting. So some great points there. Let's expand the conversation out and go back to my initial question with you, Zaid, because when you look at the opportunity for the Kingdom, it's very clear that open banking can increase competition because it reduces barrier to entry for some new participants in the market. And at the same time, it can also drive financial inclusion, which is something that you also mentioned previously, David. So what do you think needs to happen now? What's required to develop a sound open banking ecosystem in the Kingdom? Zaid, I might go to you first on this.
Sorry,
I think you're on mute there. There we go.
Sorry, can you hear me?
Yes.
Okay. I was saying that in my opinion, focusing on risk and control is absolutely key. Data protection and prudential requirements should be made applicable to all participants in an open banking system, and it should be in proportion to their materiality and role within that ecosystem. When banks are obliged to share their customers' data without any reciprocity, the data framework creates an unfair, asymmetry between the participants of this ecosystem, and new entrants should be subject, to proportionate and fair requirements to ensure that innovation doesn't, supplant competition. Because the whole focus of this whole thing is having, more and more competition, because that's how we get more efficient.
Yeah.
David, to you next, just to respond to that, any idea on what needs to be done now on the ground to build out the ecosystem in Saudi Arabia?
Well, I mean, the first thing I would do is I would absolutely echo Yazid's comment there. I mentioned on Monday about the trust framework that we have in the UK. As Yazid has said, if you're expecting a consumer to choose to share their sensitive data, I mean, I think financial data is probably second only to our health data in terms of sensitivity. We need to be absolutely certain that the organization that I think that I'm sharing this data with is who they say they are. And that appropriate steps have been taken to authorize and regulate both those businesses so that they're using that data responsibly. We do that in the UK. So the FCA, the Financial Conduct Authority, regulates all of the participants. And then we, the Open Banking Implementation Entity, OBIE, manage that directory to ensure that the data is only shared between regulated, authorized parties. So that I would absolutely do. But then I think the other part that we perhaps didn't do as well that I would love to see is focus on the consumers' benefits. We spent a little bit too much time, I think, working on the technical, the sort of APIs and the technical connectivity, the plumbing, if you like. And didn't focus quite as much on the consumer benefits. So frequently there is criticism in the UK that the population doesn't understand what open banking is. And I'm not too worried by that, in that I don't need to understand how APIs work, but I can jump in an Uber and know that it finds me from my Google Maps. And the payment will go through. I don't need to understand how an API works. I just need to know that it works, that I trust it, and that it doesn't get abused. So I think those two ends, security, trust on the one hand, and then secondly, focus on real consumer benefits for consumer adoption.
Before I go over to Tony Uzaid, I might get you to respond to that if you can, because an important point made there about the benefit for the end user. What's in this for your average, everyday, standard chartered customer or client?
And more option, more choices, increased products. We don't just rely on our own platform. We give the user access to multiple platforms, and the platforms feed off of each other and learn off of each other, and as long as the playing field is leveled, it will only increase innovation and efficiency and create just a more robust, proper system, and I think everybody can agree that it will definitely take us forward.
David, did you want to respond to this as well? The original question was, what's required now to develop a sound open banking ecosystem in KSA?
Yeah, I mean, we're 2.5 years into live now, so we've seen a few things that some things we predicted and some things that we didn't predict. One of the things that we didn't predict that we've seen is the rise of a middle tier, if you like. So in the UK, we have the providers of data, the banks, and then we have the fintechs or third-party providers, TPPs, who consume that data. And we saw it as an ecosystem built really of those providing and those consuming. What we've seen the rise of are a bunch of organizations in the middle. Sometimes, in most cases, they do operate as a fintech, or they do operate as an ASPSP, a bank. But what they also do is provide services to banks or to fintechs to enable them to engage in the ecosystem. So that was something that we didn't anticipate, and we've seen the rise of. So if you look at the fintechs that we see in the UK, I probably group them into two types. There are the technically oriented fintechs. So these are often people who've worked in banks who come out and think, actually, I can do lending in a better way, or I think I can understand cash flow forecasting for a small business, and I can provide something, and I can make the connections and do it all ourselves. But we also find fintechs who come to the market with a great idea, but don't have technical skills at all. So they're sort of mission driven, if you like. and they require support to help them understand how to connect to the APIs from the banks in order to be able to consume data. And so we've seen this rise of this, what we call TSPs, or technical service providers, who enable those mission-led fintechs to connect into undoubtedly the technical world of open banking in order to make it happen. So that's certainly something that we hadn't expected. But the final piece I keep coming back to is understanding the consumers. It's the same in any market, whether it's financial services or consumer markets, is understand what consumers believe they're going to benefit from, and make that enabled, make that happen, and don't be driven by those dominant players that may have a particular vested interest. And I say that with all due respect to Tony, as one of the major players in world banking. But yeah, there we go.
Absolutely, thanks, David. Tony, sorry, didn't mean to forget you there. Jump in.
No problem at all. I agree with all that's been said. I think the consumer needs to understand the benefits that they get. And sharing data is something that not everyone likes to do. So understanding why you should do that, whether it's for health reasons or for financial reasons, that needs to be explained. I agree with that, absolutely. I think to drive adoption, it's key to get competition. And a lot of the developments in the markets in the UK, whether driven originally by regulatory compliance or in Singapore, more driven by customer choice, it's key to drive the banks to kind of, in a way, maybe forcing them is a bit harsh, but cause them to compete with the fintechs, which is what, if you've been around as long as me, you've seen a couple of these cycles. I was around in the late 90s when it happened, when banks had to adopt the internet. Now, they didn't want to, and many in the security world were fearful of that adoption. But in the end, it had to happen because the fintechs of the time, e-commerce companies back then, forced it to happen. Consumers wanted choice. And the same is happening today. So in the kingdom, the creation of a fintech ecosystem, the regulatory sandbox that allows experimentation, is going to force banks, all banks, to adopt proactive fintech plans and open banking solutions, which ultimately, as was said, gives much better service for consumers. And it's the same in banking as it is in other industries, as was pointed out by David earlier. So competition, I think, is key, and that's happening in Saudi. Obviously, recently the announcement of digital bank licenses is going to drive that, and banks will compete. They have to.
Tony, in your experience, is there a more effective model when it comes to the development of the ecosystem for open banking? Because in other markets, we see incumbent players partnering with fintechs. We also see neobanks applying for their own fully fledged banking licenses. And there's a number of other models in place to develop the ecosystem overall. If you look at the Singapore example, I think there's also been unique models put in place there. Is there something that you've seen that works better here for the development of the ecosystem?
You're never quite sure exactly what will work best in which market. So I think the flexible model is the best one. Some markets have gone for digital bank licenses. That's had some success in some markets. In other markets, not so very much. In China, you've got two very dominant platform providers, which offer services to consumers across a range of areas, and the brand and trust in those two giant tech providers has driven the Chinese market in a certain direction, which may not work in other markets. So I think the key to it is offering flexible solutions. So in Saudi, you've got the issuing of digital license, which is great. You've got the encouragement of traditional players to partner with fintechs, which is also great. And ultimately, as platforms develop in the region, the integration of embedded financial services, I think, is the term that most people like to use these days, where banks become wholesale providers at the back end to platforms which consumers choose to go to for a variety of services, including banking. So I think the key is having a flexible model. You're never quite sure what's going to work best in each market, actually.
And I guess it's also quite brand dependent. Where does the trust lie? What does the consumer want? There's so many factors that weigh into that, but Tony, great answer there, and I appreciate you weighing in. We've got some questions coming through from the audience that I think we can also start taking because they're directly aligned with what we're talking about right now. One of the first questions I want to go to was, what route for fintech adoption is feasible in KSA? Is it bringing in existing fintech ideas from Europe, the USA, or greenfield development in KSA? What are the dominant fintech incubators and accelerators in KSA as a secondary question, part of that as well? Uzaid, welcome back. Would you like to take that question first?
I think the question presents itself. It answers itself in many ways. I mean, if you think about it, we have, even prior to the digital economy being a big focus, incubation has been quite key in KSA, and we've seen obviously with the Ministry of Investment, international companies have gotten a much easier legislation to come and be based in Saudi. They're being encouraged and they're being adopted. And if you look at the base or how they used to function before, back before the establishment of SAGIA, initially the Ministry of Investment, it was always on a joint venture basis. But at the same time, we do have a lot of organic growth of fintech facilitators and ecosystem participants, as we like to call them, that are being established in the country right now, and are participants of all natures, not only the third parties. But we have seen also SAMA approve 2 digital banks quite recently, and the licensing. And I think these will come. More information should be coming to the market about that. And these are homemade banks. These are the Saudi banks, Saudi families forming these banks. These were not international incubators coming in and forming a JV. So organic growth is supplemented by, of course, international participation.
Tony, David, did you want to take the opportunity to reply to that question as well?
No, I'm not an expert on Saudi fintechs. I'll leave Yazid as the expert there. That's perfect.
Sure.
Yeah, likewise, I'm pretty new, so I'm not familiar with specific names, but connecting to brands that are bringing technology into the kingdom is key. In particular, I think of cloud as a very interesting facilitator, and the adoption of cloud is very important in all markets, and that service provision is coming from trusted providers globally, and they're very interested in the region and very interested in Saudi in particular around cloud technology, and then how that leads to help you facilitate fintech adoption, I think is quite important.
Actually, Dan, just one quick comment on that. The one model that we have seen in the UK is, I mentioned at the beginning of open banking that many of the large institutional banks had a degree of resistance to this. What's been interesting over the 2.5-3 years of live in the UK is seeing the models that particularly the large, the sort of high street banks, as we call them, the major international brands have operated. So quite a few of them have set up innovation incubators within their own organizations. They do that in different ways. So some have set up almost a separate entity that gives space. So very, very close in London to my office, one of the big international banks sets up has an office, provides very low cost rent, provides technical and marketing assistance to bring fintechs on. Now, the bank concerned has got a vested interest because they get first dibs, they get the first opportunity to see those fintechs that are coming to market with great ideas, and often then takes a stake in those businesses when they then grow to become fully fledged businesses in their own right. But we also see organizations that sponsor innovation challenges or competitions. So we've been involved in a couple in the UK, one around consumer banking, but one specifically for SME banking, where a prize fund, quite a significant, many millions of pounds prize fund is put up. in order to develop specific products, specific services that benefit a particular part of the economy, in this case, SMEs, but I've also seen them working on things like financial inclusion. So not specifically a sort of KSA answer, but certainly some ideas that have worked well, both in the UK and in other countries.
Okay, very interesting. Look, there's another question here regarding data protection, and this is something Tony referenced earlier with regards to cloud and data centers. Uzaid, I might go over to you on this one. I know it's a pretty challenging question, but is there a Data Protection Act in Saudi Arabia similar to PSD2 in the UK? And if not, what's the implementation timeline? It's a tough one. Your thoughts on it?
Well, while there's no specific national data protection legislation that I'm aware of in the kingdom as of now, privacy provisions can be found in all kinds of other legislation, and we see it obviously with the establishment of the Saudi Data and Artificial Intelligence Authority. It's in 2019, it enhances KSA's drive and digital transformation while still holding privacy rules as paramount. We've got the Saudi National Strategy for Data and Artificial Intelligence as well, which has got 80% of the government data sets rolled out in a G cloud. You have the National Cybersecurity Authority, which was established 2 or 3 years back as well, which is a government body that sits above some of the other regulators. And I can tell you, while there may not be any official legislation yet, we know it's coming, and with the establishment of these different bodies, and as a bank that's just set itself up in the kingdom, we went live on Sunday. It was a very enduring drive, and one of the things that we can recollect from this and conclude is that the central bank and the Saudi Cybersecurity Authority data protection and privacy, more seriously than anything, and it's been one of the I wouldn't want to call it challenges, because it gives us more comfort that we are operating in an extremely secure environment relative to some of our other markets. I hope that answers your question. It's not an easy one, but I hope I gave you a satisfactory answer.
Very good, very good. One more question from the audience here before we move on. And I think, Tony, this is probably best directed at you. What's the best way to tell which banks have the most advanced back-end IT infrastructure, and how to tell the difference between the leaders and the laggards? Perhaps, Tony, also outline why this is important, and attempt to answer that for us if you can.
That's a very interesting question. I guess what banks try and do with their legacy systems, and we all have them, some of them are 10, 20, 30 years old, is what we try and do is use new technologies to provide access to those legacy systems, which make it easier for customers. So quite often, the front end of the shop will protect the consumer from the problems that are associated with legacy systems. So that's what all banks try and do. In terms of the consumer, the litmus test is what services do they get? If they send a payment, is it instant? If it's internal, possibly. Is it instant if it's international? Not sure. But if you're a consumer, you'd be looking for banks, for instance, that can provide those networks to help you with what you're trying to do. So the real test is how the consumer feels about your front end, because they don't see the back end. I mean, that's just what happens. I think all banks face the challenge in the adoption of digital as it accelerates, because it is real time. And so banks have traditionally come from a world in which, we all had data systems that used to run daily at best, and sometimes only every 2 days. Now we're required to run in real time. Some of those ledger systems that sit at the back end are facing real challenges in processing. And as I said, this is where moving on to cloud becomes critical for traditional banks to move on to new technologies for adoption, which allows real-time processing. So for consumers, it's about access to products. Well, that's fine. But I think the test of what's possible at the back end is how quickly transactions are processed. That's where the consumer will really see it. So I don't know, David, have you got some comments?
Yeah, Dan, let me jump in. There's just a couple of points. One is in the UK, in the open banking legislation, we focus a lot on the API, the common standards and those kind of things. But there was another part of the legislation that tends to go unnoticed. And that is that in the UK, we have to publish what are called quality service indicators. And these are they run externally, so it's not something that we do. We employ a consumer research organization that looks at a whole range of metrics that consumers would see, and they are the really basic, obvious ones. You know, how long does it take to open an account? How long does it take to make an international payment? How long does it take to get a query resolved online, and so on? And we survey all of the organization surveys all of the mandated banks, all the CMA 9 banks and all their sub-brands, and we publish those results every 6 months. So that's a measure of service. To answer Abhishek's question here about how do you understand the IT infrastructure, there's a very specific thing that we provide as part of our services at the OBIE, and it's called a transparency calendar. And what that is we can only require the mandated banks in the UK, which is the top 9, but voluntarily, or most of the other banks also voluntarily provide this information. They provide data about the current version of the standard that they're on, both the open banking standard, any security standards, and in fact, all of the technical details that are required, that if you are a fintech wanting to plug into that bank to be able to use their data, all of that, all of the standards to which they are operate, the current version of the standard they're operating on is all published on this transparency calendar. So it's not, unfortunately, I don't think we can say which has got the most advanced back-end in IT infrastructure, but the transparency calendar certainly explains to a fintech the current version of security standards, of payment APIs, information APIs, and so on, and makes that data publicly available in order to help the fintech to be able to connect. So that's a very sort of specific answer there.
Kise, did you want to speak to this as well? I'll give you the opportunity if you wanted to add anything more to what you've heard.
Apologies. Can you repeat the question?
Sorry, what was that?
I did not hear the question. Apologies.
Okay, no, that's no problem at all. Look, we'll move on. I think there's another question here which is probably more relevant to you, so we'll touch on that. Another question coming through from the audience: where the bank should start if they haven't started yet. So where's the best starting place when it comes to open banking? I think this is a great question for you.
Well, I think I would actually kind of reverse some of the comments that were mentioned earlier. I think the bank does need to start in the back end because although the front end is going to be the most material, as it's that's what the customer faces, but having a proper and efficient backend is extremely important. And in this new age of revolutionizing and integrating our data and our functionality between our departments, I think you have to have a proper operating environment in the backend. And I think once that's done right, then it can be kind of transferred over to the front end interface, because having that functionality is actually paramount in our view. And in addition to that, of course, just having proper technological infrastructure. I've worked in multiple international banks, and I've been in ones with better IT infrastructures. Ones that have done it in-house. Ones that have kind of brought in an external technology counterpart. And I can tell you, it's extremely key. And some of the banks have actually invested, far ahead of others in their technological infrastructure, and they're the ones that are appearing to be the winners today.
Okay, and we're rapidly running out of time, so I'll put one more question to you if there's no more questions from the audience. Could each of you maybe just take a step back and answer the question of what you think are some of the major challenges to open banking adoption and implementation in Saudi Arabia? What's the biggest challenge that faces the development of this ecosystem from this point on, and as we track towards implementation in 2022? David, would you like to start?
Yeah, I mean, not being the expert in the KSA, I think the comments around data security and so on need to be addressed. And when I say addressed, I don't just mean that somebody needs to publish a standard or publish a law. It needs to be something that is understood and accepted by citizens of the kingdom, that they feel that they can trust then an organization. You know, in the UK, TPBs pop up every day with bizarre names, you know, like plum and apricot and all kinds of names. You think, how on earth can I trust something like that I've never heard of? There has to be a framework, a regulatory framework that provides beyond question, beyond doubt, that transferring data to these organizations is safe. So that, I think, is absolutely fundamental. The trust framework is right at the heart of open banking in any country. So that's probably my number one.
Tony, your thoughts, the biggest challenge to implementation and adoption in KSA when it comes to open banking? Or any other challenges you see?
Well, I think David's got it spot on, really. It's data sharing that's the key issue. And where we've seen failure in adoption in other markets, not just in open banking, but in other areas of KYC, client identity, in some markets where that's a voluntary exercise, consumers don't adopt, either from a trust perspective, or they just don't see the benefit to themselves. So I think that at one side, you encourage consumers to share data, which should be the approach initially, but it could require further regulatory changes to make that happen. In the same way that, you know, if the tax department asks you to share data, you don't have a choice in most countries, so you just do it. That doesn't apply normally, at least not initially, to areas of financial inclusion. So there's something in between that probably needs to encourage consumers to share data, and trust is the key issue. David pointed this out, but also beyond trust, you need to give them a bit of a nudge to make sure that they understand why they're doing it.
Zaid, I gave you the first word. I'll give you the last word as well. Your thoughts on the biggest challenges on the horizon here?
Thank you. I think, you know, conceptually, what I'm about to mention are challenges, and not just in the kingdom alone. But I echo what was mentioned earlier about banking regulations. You know, they're just such, you know, operational resilience and operational risk capital requirements should be mandated for third-party providers as well as banks. You know, and especially if they provide the same services as banks, I think having a proper, you know your customer and anti-money laundering system requirements, fraud monitoring, and you know, reporting standards should be aligned and consistently applicable to banks and third-party providers as well. And regulators need to ensure that you know, there's no exit barriers for customers who should elect to switch to another entity. You know, and I think we are going the right direction with this. So I don't anticipate any of these challenges applying to the kingdom. Another thing I'd like to mention, and I've mentioned this earlier, and that's with regards to data. You know, whether having compulsory or voluntary data protection. I think you know, I would argue that the former is probably better for having you know, an even playing field and you know, reciprocity in the system, because as I mentioned in my first statement, you know, having a voluntary system would have you know, asymmetric differences and would not be efficient for a proper ecosystem.
Okay, unfortunately, gentlemen, we're out of time, so we'll have to leave it there. But David, Tony, Yuzay, thank you so much for joining me today, and thank you for taking some of my questions. Also, thanks to our audience for putting your questions forward as well. And with that, Roman, we'll pass it back over to you.
Thank you, Dan.
Great, thank you. Thank you so much, Dan and gentlemen, for that amazing panel discussion. There's one question that we have. Somebody has just sent it in, and I just want to ask, this is specifically for Tony and for Yazid, if we can just get you to comment on this really quickly, which is how are Standard Chartered Bank and Saudi British Bank, respectively, collaborating with fintechs and TPPs to leverage the opportunities offered by open banking? So Yazid, would you want to take that first? And then we'll involve Tony for that one.
Sure. Standard Chartered, in addition to establishing our first digital bank in Hong Kong box, we from an API perspective, we have Access, and Access is our open banking platform. By sharing our APIs, we invite developers, corporates, and fintechs to partner and be co-creators in this digital revolution. It's an open source code for banking products, applications, and libraries, and it serves as an adaptive layer in technology architecture. So it's a system that we created with the partnership of the experts, and something that we're proud of, and it's something that will be a work in the making.
Okay, wonderful. Tony, your thoughts?
Yeah, similar. We've had innovation centers in our main markets across the HSBC network globally for some time, and have worked with regulators and fintechs around, blockchain and obviously the development of open APIs. In the Kingdom, I'm new, so I'm just getting to know what we're doing here. But I know that we have 3 examples where we have already partnered with fintechs, mainly in the payments area, which is typically where fintechs play the strongest role, at least so far. And ultimately, we're going to see more development around AI, around robotics. It's starting to become significant in some markets around wealth advisory, but also in other solutions to consumers as well. So I'm sure that's going to develop strongly in the next few years in Saudi as well.
Super. Thank you so much for those inputs. So thank you, gentlemen, for a wonderful and very, very insightful panel discussion and for setting the stage for the rest of the sessions to come through. So David, Yazid, Tony, thank you very much for sharing your valuable inputs with us. And Dan, as always, thank you so much for brilliantly just putting it all together and for touching on the right points that the audience needed to know about open banking ecosystem in Saudi Arabia. So thank you all very, very much. And we look forward to hosting you all soon.
Great, thank you.
Thank you.
Thank you. Great, wonderful. Now, moving on to our next session. Now, right before we jump into our next session, which is an exclusive interview that's coming up, there are some very interesting questions that we have, which we want to understand from our attendees in Saudi Arabia about what their opinion is. So on your screens right now, you are going to be seeing a few poll questions. So if you look at the bottom of your screen, there is a poll tab below. The questions are going to come up in just a second, which if I can request my team to launch the poll questions. These are very, very simple 5 questions with multiple choices. You just choose the answer that's most applicable to you, and then we move forward and we'll quickly show you the results. Right? Okay, so the first question is, what according to you is paramount for successful open banking implementation in KSA? Is it creating awareness among primary stakeholders? Is it comprehensive framework? Is it end-to-end digital architecture for banks? Is it collaboration with fintechs and TPPs? Or is it the availability of experienced professionals? Or do you think it's all of the above? Second question, do you see open banking offer a more level playing field for fintechs, SMEs, and other players in the financial services sector? Is it yes, no, maybe, or you don't know and you can't say? Third one, requires a little bit of thinking, but it's worth it. So which of the below statements, according to you, reflect the most probable outcome of open banking in the next 5 years? Is it banks evolving to become digital ecosystems? Is it reshaping a financial ecosystem with incumbents losing market share? Is it the heightened risk of cyber attacks from consumer data that's made available to fintechs and TPPs, or is it all of the above? So these are very simple 3 questions. We'll give it about 15 to 20 more seconds for all of you to choose your responses, and then we're going to quickly share the results with you. So for any of you who've just logged in, who've just joined us, there's a poll that's live on your screens. 3 very simple questions. Go ahead, choose the response that best suits you, and then we're going to discuss the results in just a second. Okay, we're giving that about 10 more seconds, and we are going to close the poll shortly. Okay, super. We've got the poll results in, so thank you so much to everyone who's participated. Now, let's share the results with you so you know what your thoughts are on the open banking ecosystem shaping up in Saudi Arabia. So as you can see the results on your screen, what according to you is paramount for successful open banking implementation in KSA? 63% of you have chosen all of the above. So it is about creating awareness among stakeholders. It's about a regulatory framework. It's about end-to-end digital architecture, collaboration with fintechs and third parties. So it's everything according to you. That's good to know. Do you see open banking offer a more level playing field for fintechs, SMEs, and other players in the financial services sector? 63% of you feel it's yes. 30% of you think it's a maybe kind of a situation, and 4% is a divided opinion between no and can say. And the last question, which of the statements according to you reflect the most probable outcome of open banking in the next 5 years? 56% of you believe it's all of the statements that have been mentioned. And there are 30% of you who feel that it's only about banks evolving to become digital ecosystems. We also have 7% who feel that the most important statement here is reshaping of the financial ecosystem, with incumbents losing to market share. So thank you very much to everyone for participating in the poll. The results were right in front of you. So we know what your thoughts are and what you feel about how banks in Saudi Arabia are going to cope up with the open banking ecosystem that's coming your way, and it's right there around the corner. Okay, now without any further ado, let's move on to our next session of the day. This one is an exclusive interview. So Singapore, as we know, is among the leading adopters of open banking globally. So from Singapore, we have with us Dr. Sebastian Wisniewski joining us. So Dr. Sebastian has spearheaded the rollout of open banking for Standard Chartered globally, and we are thrilled to have him joining us today. So welcome, Dr. Sebastian. Prior to his current role, he was the CIO heading the bank's technology and data strategy, enterprise architecture, and enterprise tooling for technology product lifecycle, engineering excellence, and DevOps. Before Standard Chartered, he was the CEO of various other organizations. So we also have with us Leah Banda, who's the former Vice President, Marketing and Communications from Noor Bank, and also an executive coach. She will be hosting this very exclusive interview session. Leah is a marketing corporate and communications professional with over 15 plus years experience in local and international organizations in the Middle East and Africa. Thank you so much, Dr. Sebastian and Leah, for joining us. And now, Leah, it's over to you.
Thank you so much for that kind introduction. Sebastian, I would also like to add my thanks to you for taking the time to be with us today. And for everybody who's joining us this afternoon, thank you so much. Sebastian, we heard in the introduction now that you have successfully led the Open Banking Initiative at Standard Chartered Bank across multiple markets. Can you share what the response to open banking has been?
Yeah. So first of all, can you hear me well?
Yes, I can.
Okay, good.
Perfect.
Thanks, Leah, for this opportunity, and thank you for sharing some thoughts on this interview. Yes, so it is actually a journey now for nearly about 4 years, and we have explored the different markets across our footprint, 40 plus markets there. So not all of them has adopted open banking, but as you can imagine, one of the first front runner was this UK. Then Hong Kong came there, Australia was there, but also now, as you see in the Middle East, there are also early adopters of open banking, taking this forward, standardizing this, giving some directions there. And the way on this journey with the different markets, what I still see as today, we don't have a common standard. Yes, so it's like coming to, consent management, coming to how a regulator should come there. We are still in this kind of early phase of exploring the capabilities and opportunities of open banking, but we are not in this way that we already know this is defined as the scope of open banking and that's the only one way to approach. No, it's actually now to see the good news is in Asia, Europe, Middle East, they are going also different ways on this journey. And now with Standard Charter, exactly, we are also adopting this with the variation of the countries.
Wonderful, thank you. And I think through the discussion of today, hopefully we'll be able to get more insights and try and still understand how we can get that common standard going. So thank you for that. I think it's fair to say that almost all the GCC countries are heavily overbanked, and providing excellent customer experiences is a major competitive edge for any bank, quite frankly. One of the key unique selling propositions of open banking is its ability to provide customers with better services in terms of improved product offerings, customer benefits, just to name a few. How do you see open banking giving banks a competitive edge? And secondly, do you think the benefits outweigh the concerns around data privacy?
Yeah, very good. Yeah, data privacy, that's, for example, consent management, why is this key? Right. Let me give you a flavor, because 2 years ago, I was in Bahrain and there was exactly this open banking also summit where we are going, and also how we lead forward there. If I'm seeing this on this 4 years journey, and where I see ahead is like, and that was a good example with Bahrain, is, the starting point, especially in retail with open banking. We, by the way, have also adopted open banking in the commercial banking, what is a bit different than retail banking. But the starting point usually with the regulator is they think, and it's a good entry point in a sense, I can give my customers more transparency about different offerings. Yes, so that is like a marketplace. There's now the different APIs, and to say, okay, what is my interest rate with this bank? What is my interest rate with that bank? And there's also some regulation coming back to the Bahrain that they are saying, okay, give me now your interest rate, and I want to put this on the portal, and now my customers can select which account they want to select. So I gave, especially now this regulation, a kind of different perspective, because when you're going to private banking, and especially in Middle East, where you're also going to affluent clients, when you're going there, usually it is not just, especially now with Standard Charter, not a straightforward answer. You are getting this interest rate. So usually there's a bandwidth because of different conditions, different various, to say, if you want to take this credit, these are your conditions. So that is now the limitation where we are today with open banking, where they are saying, okay, there are standard banks, and they are saying, doesn't matter what customer segment you are, you're always getting the same product. Now we are getting really into this kind of situation. Open banking should also adapt to customer behavior, customers' expectations. So are we there yet? Not in all countries. Is this the right way to go forward? Exactly, because your point was open banking should be for the customers, and not just to see, I have a marketplace and then I can compare, because at the end, then it's nothing as a comparison of what you can read on the official website. But banking is usually also going more personalized, and now coming to the aspect where I see the future of open banking is contextualized. So that will be exactly, now my context is a good example for me is usually when you go into a bank and you're saying, I need now a loan for, or a credit for buying a car. Yeah, so this is why you're going first. But what is your user journey? What is your context? And actually, after you buy a car, what you need next? You need an insurance. So then open banking is now the flavor. I'm going there, I'm getting my credit, and I get also my insurance. And do I need to provide my data to the insurance company and to the bank twice? I think this is, and it's coming to this rating. What is now your policy? What is there? And when you're coming exactly to these conditions, that is the advantage of open banking, to really take my advantage with my data when I'm going across the different, in my context to the different companies along my journey.
No, thank you for that. And I think you've touched on a few points which I wanted to expand on. So open banking is really about understanding the customer demands and needs. That's where we should really be focusing. But also in the earlier discussion before our exclusive interview now, there was a discussion around trust being a critical area that we should really focus on. So do markets such as Bahrain that you just talked about in the retail space, and maybe some of the other markets that you talked about, UK, Hong Kong, Australia, how have they dealt with the trust issue?
Yeah, okay, that's a very, very strong situation, because usually when you're coming with your money to the bank, then you need a level of trust that you are getting your money back, or even you can grow with your money, and you can further, can manage your wealth and all of that. Yeah, so this is like the entry point of the trust, that really your values will be treated well and will be also in your advantage. Yeah, so as a customer. So, and this is now exactly where a bank like Standard Chartered puts a lot of energy there inside. And now coming to the real point, what is a kind of critical shift in the market is like, trust was usually defined in banking by the people. So I have a relationship manager, I'm going to a branch, and in the branch, I'm trusting because I know my person in front of me, he knows me, he gives me, or she gives me the right offerings. She also took care of me. The customer relationship management was the definition or the foundation for the trust to the bank. So now as the channels got much broader, with websites, with all of that. So how you define now the trust to the bank, what is maybe not anymore like humans as personal. Yeah? Yeah. So, and we in Standard Chartered had, a couple of times this, be for good. And, it's like also then we are saying digital with a human touch. So how we are going on this journey that you can trust even based on technology, what is helping you with your values. Yes. So, and that will be the critical element in open banking, because open banking is not anymore just defined by the human interface. Now, open banking, as I said, with the contextualized, you're trusting your smartphone, you're trusting your IoT device like a watch and all of that. And now, how you ensure this trust, what you're putting there in this new technologies, that at the end you are getting then the same financial services as you would got in the past, what was more like, I will say, dependent on the trust of the humans. Usually, to make it like that, we as a bank put a lot of energy that this human relation is the highest priority. But at the end, and this is sometimes when trust got lost, is, you can't control humans. Yeah. Right. So, and especially when I'm going to a branch, when I'm going to a bank, when I'm going there talking with this person, you not always have the transparency. What are the measurements of the client relationship manager? What are his targets and interests? Is this now the font what he is providing me in his targets, or is it in my interest? So now there's this open banking gives you one thing, what is very, very strong, transparency. So now transparency gives you a very new level on trust. What this human interface had some limitations. Of course, there are good people unfortunately, there are also people who are misusing the trust in some sense. And yes, then the bank has to fix it. We have still our valued behavior, code of conduct, all of that, because of, yes, humans you can't control. But now with the technology, we have more controls on that. We can create transparency. And actually now coming back to your data point, now when I know this is my data, and for example, there's a decision engine, there is like this interfaces, this APIs, these are the sources, and I get the transparency, then I know why I got this recommendation. Right. Why I got this there. So it's not just like, okay, where we are today with open banking, okay, there's a marketplace and I as a human can compare now different offerings. The open banking is going there more really into this trusted advisor would get very, very personalized.
Right. And I love your comment there that Standard Chartered Bank is really focusing on digital with a human touch. And I think that's what's critical for us, and especially as we talk about the trust issue. Just shifting focus for a second, I think you would agree with me when I say that the COVID-19 pandemic has affected each of us at some level. And it has also undoubtedly accelerated the pace of digital adoption worldwide. Has this pushed banks to be more receptive towards open banking, in your opinion?
Of course, 100%, because when you see, it's like a human always, we have our habits, we have our, routine and so on. And usually, when you read books and so on, it takes like 30 days when you change your habits. So now COVID was so long that people, there was a situation that branches are closed. There was a situation that you are not have like always this 24/7 service, what you usually was maybe in your pre-COVID time was used to be. So now as you started to adapt to the situation, be more at home, be in a very different situation, you opened up at least also to technology more what you have done before. So now then you see, and what I said before, there are also a lot of advantages when you see, oh, now I can get a different level of trust. I can get transparency behind something, or I can even get also the same values what I got so far with less friction, because I don't need to drive. I don't need to look on time, appointments. I can do this more in my context or during my life to make it more convenient. Yes. So, and that was also what you see, that the people opened up for other channels, for other options, and they tried it. And when you try it and when you see this, yes, it works. Oh, yes, it gives me some advantages. And of course, the adoption rate got significantly increased. And you see also the acceptance got significantly increased.
No, that's wonderful. And I think those who were scared of adopting digital platforms, especially during COVID, now I think there's that the unknown is more known now, and that ease and use of it has definitely made the difference. Do you expect the challenges faced by the GCC region, where open banking is led by regulation, to be fundamentally different from those faced in a market like Singapore, where open banking was more market-driven? And just adding on to that, do you believe the GCC region can learn from a market like Singapore, because their open banking implementation is amongst the most successful adopters globally?
So, and this is a very, very good example. I'm still a strong believer we need regulation. That's my own point of view and my lessons learned. So during this journey with different markets, it's quite interesting what will be, a role of a regulator in open banking. Is it more like giving you guidance and you have to follow this guidance? When we see like Hong Kong, they created also a portal where they said, oh, your APIs, what you're putting for open banking should not be only on your portal, should be on a, consolidated portal where you give the options to all third parties, to give to all of them, to have more transparency. What are all banks' APIs across the market? But what I'm still missing a bit, like sometimes, because yes, of course, this is now the journey of evolving. a very strong role of a regulator. What actually a bank, from my perspective, should not have is like now when it's coming really to this trust element, is like your identity. Yeah, so it's like the question, should a digital identity be with a trusted authority, what is independent of the bank, or should it be in the bank? So I'm a strong convinced, why not that a kind of trusted authority would be with a governance, with all this, that, because this gives us a much stronger open banking footprint, really in this kind of, oh, my financial services in this context, this is the advantage. We are focusing really on that, rather than when it's coming to what we talked before, GDPR and all of this kind of things, they're always interlinked then with authentication and all this trusted authority. Is now this something, a new area for a bank to be like the identity management system? Yeah, so because that makes it also a bit difficult for a regulator, because then you need 24/7 what the bank needs, you need the high service, all of that. I understand this problem and why also this is still an evolving thing. But coming back to be just market driven, if you're reflecting the experiences with Amazon, Google, all of that, gives also some monopoly where you also then get some limitations with the marketplaces, where you get some limitations with, oh, there are also very, very new offerings, what we should really empower, encourage, like new digital banking, new services, and not just to say, oh yes, because these are the established banks, they know what they do, they have a better strength. I think that is now the strength of open banking, to give a new dynamic into that, and the regulator can play a good role into this.
So it's about collaboration. It's a nice balance between the regulation as well as the market led. Would you say?
Right, exactly. Right. Yes, because it's also the journey, because that was some discussions I had in Bahrain, was like, oh, I need this and this API. And it was a good point of view from the regulator, but then I explained to them, oh, if you're not just, I have a call and give me interest rate as a return, what sounds like a very simple API. I explained then to say, okay, can we make more like this context inside the API request? Because then you can get a more dynamic response, because otherwise it's a very static response. And then we are not in this kind of contextualized new world.
Okay, thank you for that. How critical are collaborations with fintechs and third-party providers for leveraging on the potential of open banking? And also, do you really see open banking offering a more level playing field between fintechs and other financial market players? And I think through the polling that I saw earlier, I hope I got the number right, I think only 4% of our audience felt that it would offer a more playing field.
Yeah, so, and this is a very, very good point. Yeah, so and we with Standard Chartered, we have founded, it's now 3 years ago, 3+ years ago, SC Ventures, focusing on all this kind of new business models, investing in fintechs, investing in third parties, and going this journey really with the spirit, because we are also very convinced about this. To frame it like that is, where the banks are very strong is, I'm usually calling it like this transactional banking, what is like queue-based. Yeah, so it's more like with a delay. Right. So we are always like, good, okay, you put something in the queue and this will be very reliable and you can trust you will get a response. So now as you see the world, how they translate, there is no delay anymore and there is no queue anymore. You want to have right away response.
Instant,
and all of that. So, and you know, like the tension is like sometimes less than 2 seconds. If I not get response, I'm going to the next one.
Right.
So, and now when you see how still the infrastructure of banking is built for payment and all of that, it's always queue-based. So this means there is all of that. But now when you're going like how startup companies, even now more mature, like Uber and all of them, they want to do instant payment, fast payment, all of this kind of things. So now from a technology perspective, I'm coming from technology, now 2 very different worlds are coming, where you have built for delays, for reliability, for this, and the ones who have right away response. And you can imagine now this very two different patterns.
They're almost like
to bring
clashing.
together.
Yeah.
Yes, clashing. But this gives now the, I will say the new architecture, what we need, because the instance has sometimes also the disadvantage. Okay, how do I ensure a failover? How do I ensure that now really I get one response? Because if you know HTTP, like web, is one of the worst protocol, because when you send in your browser, you don't see this, but in the transaction, for example, you make one request, and because of all the network, you maybe get sometimes two response.
Right.
With payment, you can't do this. So yes, you will be happy. You say, oh, I want to have $100 US, then you're getting suddenly 200. Yes, of course, you will be happy. But from a regulator perspective, it's unacceptable. So long story short, we need exactly in this kind of two technology world to drive on one side what customers need. They want to have instantaneously, and we have to meet it. But on the other side, this is now, okay, reliability, trust, also then the whole security and all of that, where the bank grows up. Yes, so I think this is now the strength, because now the different industries, telcos came inside, making also mobile wallet, making a lot of new things, how we make instant payment more smoothly. But there are still limitations, as you can see. A mobile wallet is a great idea, but you're not getting interest rate. So now someone will say, oh, why should I use my mobile wallet with a lot of money when I can put this there? So now why we should mix it together to say you can use your mobile wallet and you still get interest rate. So now in this kind of mindset, that's the open banking, to say there is a need for new business and use cases. And on the other side, there is also the possibilities that we make it attractive. Yes. So, and long story short, it's like that was exactly now when I'm reflecting, especially the last 2 years, where we significantly have also now increased our business with payment instantiation, with payment, as I mentioned, also for corporate banking, where, like now this is a very new world for them, open banking, not just for the individuals. Yes. So where you can really make supply chain management very different, where you can make the integration of third parties very different.
I think exciting times ahead, especially trying to manage both of the worlds of delay versus instant. I think we're running out of time, but I just wanted to ask you this final question. What do you believe will be the major changes we can expect within the banking industry, whether it be regionally or globally, because of open banking, say in the next 3 to 5 years?
Yeah, I sometimes I'm trying to very simplify this. And when I would like to simplify, coming to our conversation so far, I would say, how is banking making money? And I will say this very simple: because of delay. You have a need and you give us money, and with supply chain management is the best example, because there is delay with investment and then shipping goods, then paying back and all of that. Always this delay is where the bank is making money. So money is actually in a banking and financial services only because of delay. Now, if this delay is shrinking and disappearing, now the fundamental question will be, and just look in as an example, okay, we can't now do very professional drugs in 3D printers, but this is just a matter of coming. So now, if more and more is going into this world, where's the delay? Now between delivering the goods, printing it out, making the product, to your customers is changing. So now this whole supply chain financials will change. So now coming back to your question, I think the financial services will get really understand to make money without the delay. They can survive. Anyone who's still making, okay, because I'm giving you this money in 1 month, I make my interest and I make also my profit out of that. This will not be so much in the future anymore.
Sebastian, thank you so much. You shared so many nuggets of knowledge for not only me, but the audience here today. And I think your insights and your learnings really will be valuable for any financial institution who's looking to adopt as well as implement open banking within the GCC region and more specifically within the Kingdom of Saudi Arabia. I thank you sincerely for your time and such an informative session. And I'm going to hand over to Roma for the Q&A. Thank you, Sebastian.
Thank you very much. Thank you very much.
Thank you. Thank you so much, Leah. We know that you have to leave. So thank you very much for joining us and for bringing in that much needed interactivity for the session. Thank you very much, Leah, for beautifully steering the discussion through, and Dr. Sebastian for giving those amazing insights on open banking, which the region is going to be embracing soon. So we have a couple of questions, and firstly, it's a very basic question, but I definitely want to ask you this, which is why do banks need open banking? Is it because it is going to solve the current issue, or is it because it's all about embracing new technology? So why do you think open banking is the need of the hour?
Yeah, so to make it what I said also before, it's like there is a need that you have to think in this world, why do I need financial services and how do I want to apply financial services? And going back to the past, you went to a branch physically to get financial services and then you got it. Now, as you see today, you still go digital to a bank because you have to go to their portal or you have to go to their mobile app and then you're doing the financial services. So now when you go the evolution, the next is you don't want to go to the bank's app to do financial services. If you want to go to a cinema or you're already in a chat, why you not do the payment in the chat, right, instantaneously? If you are more into a context because you're on whatever, now a runner and you want to have a drink, why not your ring is paying for you? Why? So you're getting into a world where the demands are getting very different and you already see early adopters who are doing that. So, and now with us as a bank, the demand is getting more diverse and the possibilities, how you want to do payment, how you want to have your credit, how you want to get actually your wealth of life is changing, and not that you're spending so much time anymore with your physical presence.
Great, wonderful. Thank you so much for that answer. I can take in one more question, Dr. Sebastian. So this question here is, we believe one of the key challenges that API standards driven by open banking regulation focus on retail banking user cases, which may leave corporate banking without a similar set of API standards. So what do you think has been experienced so far on this front?
Right, and I agree. I totally agree. Let's take like, you know, the payment, PSD2 and all of that. Yeah, so, and if you're going there, of course, they are starting always with the individuals, retail banking. This is the way where the spirit of open banking was born. But now as you see how it's evolving and corporate banking getting a very, very different relevance, that's why I mentioned also at the beginning, now, unfortunately, there is no standard. Unfortunately, even across countries, there is no standard. Now, as we are still in this time of evolving what is right, I think to be an early adopter, the best is you learn. So the best what I see also in the country regulations is, okay, you set some guidelines, you set some principles, like for example, security and all of that, but you're not specifying very, very accurate now the payload of the API, because that is something what UK has started, but it will not really drive innovation. Innovation is more like, okay, set the what really matters with the controls, with the security, with compliance, with all of this kind of element, what really is important for the trust element. But then let the innovation flow, how the market is adopting it.
Great, wonderful. Thank you so much, Dr. Sebastian, for answering those questions and for giving such insightful and amazing responses to the interview session and for making it so lively and informative. So thank you very much. And we look forward to hosting you at yet another Open Banking Summit coming soon. So thank you very much. Yeah. And now we move on to our next, thank you so much. And now let's move on to our next session, which is a very, very engaging panel discussion that's coming up. So What are the main challenges that the Saudi banking sector is facing when it comes to open banking adoption and its successful implementation? So moving from monoliths to API and microservices architecture, it's a major challenge for incumbents. And finding skilled people with the know-how is critical as well. So when it comes to the customers embracing open banking, one of the major hurdles is concerning data privacy. So how can these major challenges and other roadblocks be resolved? This is something we're going to find out through our next important discussion. And to lead the discussion and to introduce you to all our other panelists, I'd like to invite a digital and retail banking expert with extensive regional experience who has worked within Saudi Arabia, Egypt, and now in the UAE. So we are honored to welcome Mr. Andrew McKechnie, known as Andy McKechnie as well, the Chief Retail Officer at Al Masraf. Andy has spent his career in retail banking and has worked across UK, Europe, Middle East, and Africa, and has a wealth of experience in senior roles in multinational and small independent banks. So it's over to you now, Andy, to introduce you to the panelists. Andy, are you with us? There we have Andy. All right, over to you now, Andy.
Hi, good afternoon.
Andy, you're on mute. Yes, okay.
Let me just take you off mute. I should be off of mute. Can you hear me now?
Yes, we can hear you. Great.
Excellent. Good afternoon, everyone, and thank you for the kind introduction. This afternoon, welcome. In this panel discussion, we're going to be, as we say, addressing the challenges to open banking, be it the talent gap, the legacy systems, data privacy, and as you say, amongst many other issues. And kind of with the advent and the announcement by SAMA to launch open banking and go live with the design phase, moving to the implementation phase, and go live by this time next year, there's going to be inevitable challenges, and some of those you've touched on through this these sessions earlier on. So I'm really delighted to be joined by three experts in the digital arena to discuss these challenges, that open banking will bring, and importantly, how these proposed challenges are going to be addressed for success in readiness for live. We've got Maison Ferran, who's Chief Digital Officer at Ria Bank. Huge amount of experience in the arena. Describes himself as on a mission to make use of an impact of the fourth industrial revolution, if you look at his LinkedIn page. So delighted to welcome Maison. I'm welcomed by Mike Cunningham as well, who's Chief Strategy and Digital Officer at Banque Saudi Fransi. Welcome, Mike, and describes his core focus around digital banking strategy and bringing in innovation to banking models, so ideally suited for this session. And finally, Ronak Ghose, who's MENA and Global Head of Research and co-head of the FinTech Theme Group at Citi. He describes himself as purely about banks and fintechs. We've clearly seen some kind of early interesting comments about how open banking will benefit banks, and no doubt we'll pick up on some of those themes as we go through. So without further ado, I'm going to dive into the first question, and we're going to have time, as with the other sessions, for a Q&A a bit later on. So I'm going to start with the first question, which is, look, much has been talked about in getting ready for this change to open banking, be it technology, data, talented human capital, and so forth. And we've also seen in developed markets that large players really drag their heels and miss deadlines on implementation, the particular case in point being the UK. So my first question, and I'd like Maison or Mike to pick this one up, Maison first, is what do you see as the primary activities and building blocks to get your organization ready to successfully deliver the change on time? And how are you organizing yourselves at Ria Bank? We'll start with Maison if we can, and then Mike, if you can follow on in the case of Banque Saudi Fransi.
Well, thank you, Andy, very much. First of all, thank you for the kind intro, and I'd like to thank Q&A for the invitation. Delighted, really an honor to be amongst such a brilliant panel, Mike and Ronit, influential leaders in the industry, so very delighted to be here. To your question, Andrew, I guess, as you rightfully said, this is a kind of a new motion emerging, and there is a lot going on, and I think we have in the region, since this is recently emerged, we have the blessing of learning from the experience of other countries and other regions, and the faults and successes there, and trying to take our way. But I would say, for example, maybe 4 key elements would help us kind of set for the change and would be the building blocks for this. So the first and foremost is really setting the right vision and the frame of reference within the organization. So building the awareness of what is this open banking movement all about? Where is the opportunity lies? It's not a motion of mandate. There is great opportunity, and there is as well great threat of if we as well drag our heels and come late to the game. So the driven by opportunity is a key building block. The second would be, I think, kind of streamlining the architectural update of, if you wish. A lot of the complexity in this whole motion, as we learned from different experiences, is yes, there is a new elements and pieces of technologies, kind of building blocks for this, but the underlying architecture modernization for this and moving from legacy to a modernized architecture, APIs and microservices and what have you, is a second building block. I don't think this is a new motion. I believe and I would hope that all or most of the banks have started their journeys or progressed by far now. Those that haven't would be a serious challenge. Third, obviously, there is a new element to the whole ecosystem within a bank to make this possible and ready in between, obviously, technology components, but as well business operation that is quite different and new. And I would say 80% of that is roughly possible to build and roll out, have ready even ahead of the final, details and necessary standards from the regulators and what have you. So there is a lot that can be prepared and help this motion move faster and banks to be ready. And finally, I would say, and I think it would be a crucial element, is to build, tap in, and activate, the networks of fintechs and the ecosystem players, because eventually this whole banking motion is an enabler to business model in collaboration with that ecosystem. So in between these 4 points, I believe these are the things that constitute the building blocks for us.
Thanks, Mazen, and I hope it's successful, because I have a vested interest in Ria Bank. I worked there from 2009 to 2013, so I have a deep affection for the organisation, and you're in a great place. So great to have you on board this afternoon, and thank you for that. So, Mike, what's your view? We've talked about the right vision. We've talked about data ecosystem and the network for fintechs. How do you see it playing out at Banque Saudi Fransi?
So not dissimilar at all, Mazen. Hard act to follow there, because you said a lot of it. Rather than kind of 4 stages of mobilization before we even get to lay our first line of code, we've actually broken it down into 5. The first phase we call understanding. This is understanding what open banking is, understanding the gaps that we have, so that we can kind of size the change and ensure that each part of the bank understands what their role is in it and the impact of it on their function. The second piece is what we call alignment. And this is alignment with the regulator on their plans, on their vision for it, how they want it to happen. Third up is what we're calling talent density. So open banking is new. None of us, there's not a single person at BSF that have been through an implementation of it before. And whilst we are all up for a big challenge, we don't want to make life more difficult than it needs to be. So we're bringing in talent from other markets that have been there, seen it, done it before, got the t-shirt, to try and make life that little bit simpler for us. Fourth phase of mobilization is then what we call opportunity. So this is where we've been working to identify what's actually in it for us, right? What new opportunities does open banking bring for Banque Saudi Fransi? How can it change our operating model? How can it enable new business models? All of this type of stuff. And then the final piece is the plan, right? What, exactly what it says on the tin. How are we going to get this done? What's it going to cost? And what do we need to ensure success? So very similar to what Mazen quite rightly said, but probably over 5 phases, but a lot of them running in parallel as well.
Thank you for that. Really clear. And I guess, René, you don't come from the kind of the banking side. So the really question from really for you is, if you look at this from a kind of fintech perspective, can I ask, what do you think will be the key elements to get right in order for fintechs to succeed with this regulation? And what will they most likely looking to leverage out of this change from your perspective?
Sure. Thanks for the question, Andy, and thanks to the organizers for having me on this panel. So from a fintech perspective and from a bank perspective, what open banking builds on is 10, 15, maybe more years of change. So I'd like to put this into historical context. There was a period, basically 1960s to 1990s, and there's a huge amount of change that created the consumer banking world and the business banking world that we all grew up with. The form factors that we know, credit cards, debit cards, prepaid cards, ATMs, all of that came out of the UK or in many cases the US, starting late 50s, early 60s. Now, since the 1990s and particularly in the 2000s, we're in this different world. We're in a mobile first or sometimes mobile only internet powered world. And open banking is sitting on top of that because what we had since the 1990s, and particularly the 2000s, is that you've seen a significant sort of breakup of the value chain. You've got a lot of new players coming in, that's where the fintechs get involved. And you've seen this in the UK, US, China, and it's obviously beginning to emerge in this region as well. So for the fintechs, the opportunity to open banking is, what fintechs are really good at, if they're some fintechs, not all, what they're really good at is new product build. For whatever reason, banks seem to have lost the ability, or maybe it's amnesia, they've forgotten the ability to build really good new product. When I think about new product in the last 5-10 years, ain't been coming out of the likes of Barclays. It's coming out of Square, it's coming out of Alipay, right? And fintechs have been really good at building new product for the digital and the internet era. And open banking allows us to unbundle and then maybe rebundle again. What could go wrong for the fintechs? Regulators and banks. The regulators, in a way, and the banks, folks like Mike, Mazen, and more importantly, their colleagues in other divisions need to be willing to play. If they take a very proprietary closed model, fintechs can't break in, because the biggest advantage that banks have is that they have the benefit of incumbency, but more importantly, a regulatory moat. So fintechs need the banks and the regulators who are willing to play.
Excellent. Thank you very much. We're going to kind of build on this a little bit more when we talk about new business opportunities. So my kind of follow-up on this is really around the new opportunities and business models and products and market opportunities that arise from this initiative. And I guess, and I'll come at this again from the banks, first of all, because I think, René, you've begun to touch on the evolving change in retail banking and where the value chain sits. Really interesting to say who's taking the capital position, because we've seen fintech struggle to break into the kind of real value creation side of banking because of capital constraints and so forth. But I guess, asking the bankers again, how are you incorporating this into your strategy? You talked about your strategy earlier on and your business planning. How are you going to create value for shareholders? And can you give some potential thoughts on how this will change your business thinking, whether it's segments, products, or channels to market? And so how will we get value out of this as banks? And so, Mazen, any thoughts on that?
I believe that's a very good question, and I think end of the day it's really about the value and new value creation. So I would tend to think that we in the bank, and I'll assume all the banks that are active on the motion have taken a vision of opportunity with this whole model. So that would reflect potentially in two kind of main categories or streams of value creation here. Primary one is banks working closely with us, and to Ronnie's point, I tend to agree that the inclusive play and being open to the fintech play is makes or breaks the story. And I don't think it's only a matter of supporting fintechs for whatever reason. It's a new dynamic in the market. It's a new business models that can only be enabled by collaboration and so on. So I guess the focus on revenue creation here is co-creating new value propositions, with agility. So leveraging the open banking technical mandates, if you wish, or standards that kind of break down barriers of time and cost and introduce agility in creating these new business models and products and so on, and co-creating value with strong potential of uptake on any successful model there. And that's a value and potentially a revenue stream, new revenue streams, both ways, and that's a value for bank shareholders. I think the other main bucket and stream is inherited in the the standardization and normalization of integration that comes from open banking. So it's so much, when you take this movement and look at it at a silo, you will realize there is definitely cost and time to build on this, but that investment in the standardized architecture and design and solution would really enable a time saving and cost saving whenever there is a new business case or a valid business model that needs to be adopted, so it can be adopted agility. You have removed cost and time from that equation, and that is value and saving that is passed on to both the end customer and the shareholder. So I guess in between both, this is where I look at the value from this in the long run.
That's a really interesting point. And I guess it touches on a really kind of touchy aspect of all of this. You talked about co-creation and collaboration. I wonder, Mike, we've always been worried as bankers about inviting the enemy into the tent, as it were. We're inviting these people to come and dine with us, and therefore the threat of cannibalization has always been the risk. So how do you see this in terms of creating value for Bank Francie, and how are you dealing with this kind of worry of inviting fintechs into your house?
$1 million question, hey? And I'm going to declare right now, I'm still not 100% sure what the open banking kind of wow moment is. I've got some hypotheses, but that is about it, right? So I think that the way in which banks approach open banking has a lot to do with what we can get out of it, right? So when I look at the EU's adoption of open banking standards, it's been led by the regulator, and therefore it's been more about complying with the standards versus imagining what the art of the possible is. And I think, in my team at BSF, we're trying to think about it differently. We're thinking about how we can embrace it, right? We're not scared of fintech coming. They're coming, they're on their way, it's unstoppable. So let's just get and be part of it. And I can see plenty of opportunities from that. And I think for us, our start point is around bank as a service, right? So to begin with, and this is testing part of my hypotheses, building APIs, similar to what, Mazen was talking about on bilateral partnerships makes the most sense. It's lowest risk, it's lowest cost, but it still allows us to test our ability in that at a broader ecosystem, including that of, Sama's kind of appetite on this. Ultimately, at BSF, we aim to have full open banking platform, well-documented APIs, full sandbox environment for developers. And, a lot of people say to me, why are we doing this? And for me, it's simple, right? I want to be able to monetize assets that we've got today that we just can't do. We only use them for ourselves. I'm talking about, APIs that allow third parties to come in and utilize our payment rails, our account origination services, identity verification services, BIN sponsorship, custody, data access, all of this type of stuff. And in reality, we genuinely hope that the regulator, likes this future, because we think in some ways it actually makes their life easier, because we're going to become the enforcer of regulation on fintech and NBFIs as they connect via us. So we're becoming that gatekeeper of standards. And I think genuinely everybody wins, and what better place to be than that? Consumer gets better service, ecosystem innovates and grows. Fintechs get a simpler, lower cost route to market, regulator empowers the banks, and guess what? We make new money instead of being replaced by fintech, because we're that anchor for fintech. So my view is like I say, I don't know that wow moment, but that's where we're starting from.
That's really interesting. And I think, this is really one, you talked about the kind of evolution of where we're going. And in previous waves of digital transformation, we saw a lot of the hype, I think, Mike, you've referred to this, the wow moment, the vision of profound change, and then things not quite working out as planned, and the main incumbents in the market have ridden the threat of loss of market share, etc., and it's all gone away. And we thought, ooh, another wave has kind of gone. So really, what makes this change different from previous times? And do you think we're going to see real trend or change in financial services as a permanent feature of the landscape as a result of open banking?
Yeah, I'll try to answer the question of why maybe change has been overestimated in certain segments, and then we'll talk about why there has been change. So in terms of other industries, typically you've had this narrative of look at what the internet's done or technology has done to newspapers or the media or music. I mean, there was a time when basically, DVD sales or cassette sales would make you rich as a musician. And then streaming came along and we're all like listening to whatever, Spotify or Angami or whatever. And it changed the model. Ditto on media. I think we're going to age ourselves now, but I still remember black and white TV growing up in India. Mike, do you remember? I don't know. It's actually 1970s. It's actually the early 70s is when black and white TV sales in the US overtook color TV. Sorry, the other way around. Color TV overtook black and white. So most of these other industries have had these profound changes earlier than banking. And in banking, we have this wonderful moat called the regulator, which means that you can come and try to disrupt music or media or newspapers. Sure, they have unions and other barriers to entry, but in order to get into banking, you need a license. And that's a really hard thing to get. It takes years, it takes millions of dollars, and it's a difficult, rightly so, process. And that protective moat around, particularly some of the core aspects of banking, have made it harder for particularly the tech bros thinking, oh, this is old fashioned, I'm going to come and replace it all. They turn up and then, a great example has been one very large social media company trying to reinvent money in the last couple of years. They published their white paper, got their code out. They spent a lot of time working on their code, didn't really talk to regulators until they put their white paper out. Not surprisingly, the policymakers and the regulatory establishment kind of came down like a ton of bricks on them. So there is a dissonance, there is a difference between other industries, not just the tech industry and our industry in finance. And new entrants often forget that, and that provides protection. And that's the reason why, unlike newspaper sales or DVD sales, banking revenues haven't collapsed. But now what's happened though is our industry revenues haven't collapsed, including in this region, but we haven't captured a lot of the new growth. And a really good example of that is look at and it's not that equity market's always right, they're often wrong, but look at the equity market value of some of the biggest financial companies out there. Take the US, which is the deepest, biggest capital market in the world. Some of the biggest financial companies are not banks anymore. There are $400, $500 billion companies that came out of payments. There are $100 billion companies or $60, $80 billion companies that came out of crypto or very new asset classes. And so in a way, yes, we haven't lost a lot of revenue, but we've missed new opportunities. And that's where I don't think you call them Visa, MasterCard, fintechs, but that's where some of the fintechs and payment companies have really captured value in the last 10, 15 years. They've gone into the white spaces, the gaps, and that can carry on happening if the banks aren't careful. So you don't need to see Mike's revenues collapse for there to be growth elsewhere.
So you're a fan of it's here to stay, as far as
for sure. I used to be wedded to my BlackBerry. I had to literally take it out of my hand a couple of years ago, my corporate BlackBerry. Now I have several of these. I'm a late adopter, but I've got several of these iPhones. It's here to stay. And we better adapt to that. We have to. Excellent. So just moving on from that then. So, seen in other markets, the cost of this change, open banking, is extremely high and very time consuming, traditional banking legacy systems causing problems.
And you've also seen in the UK market, fintechs are now pushing back and saying, look, these guys haven't implemented it properly. They're only giving us limited access. I take your point about the banking license and whether that's a kind of cynical view of, we're going to invite these guys anyway, and they're going to ride off the back of our licenses anyway. So that barrier may have gone or may be falling. So kind of, what else do you think, learning from the kind of UK market, do you think that KSA could do better in implementing open banking so they don't make the same mistakes as what happened in the UK? I don't know whether, Mike, you can pick that one up, because you've clearly had experience of all of these markets, and what could we do better in KSA, to make this work for the fintechs and for the banks?
I think it's the big blocker is one of mindset, right? So open banking removes all of these barriers to entry, other than the big capital piece, cost to entry to a market, etc. And because of this, quite rightly so, banks are nervous and suspicious, and a lot just react by doing the bare minimum to comply. So they don't build great things for fintech to be able to do things a lot simpler, etc. But they're not actively participating in the ecosystem. And it's that mindset that, the more we resist, the more we'll be able to, to stay afloat. And I think at BSF, we've just got a very different view on that. Fintech's coming. Open banking is going to make it easier for them to do business. Fintech's unstoppable. Let's be part of the solution and not, the problem type thing. And let's find a way to be part of their revenues. If we don't do it, someone else is going to do it. And we're not going to be left behind. So it's genuinely, for me, it's about a mindset shift in the organization, culture shift. And let's just grab it by the horns and get on with it.
Excellent. Mazen, what do you think?
Well, I think as well, I agree with Mike in terms of, how a bank would position itself and deal with this whole paradigm. But I have a bit of trouble with the question, if you allow me, in terms of cost barrier and time barrier or investment in open banking. I believe this is entirely true, but it will be a symptom of another problem. A lot of the costs and time in these endeavors are not really entirely being sunk in the adaptation or implementation of open banking for itself. It's mostly in the underlying legacy and modernization of that legacy. So that transformation or that investment is well due not only for open banking, but for banking at large. Nevertheless, I would guess key elements that would help perhaps in the KSA market is, again, leveraging on and tapping into that experience from the different markets and the lessons learned. But I think one important thing is there will obviously, no matter how we focus on it, there will always be, it is an endeavor that requires time and effort and cost, and prioritization becomes important. So putting the horse in front of the cart, in a sense of involving and working closely with the fintechs and the market dynamics, to kind of design the whole motion within the bank in a prioritized fashion that is more in sync with what the market would make sense of, what the use cases that are under demand or underbuilt by fintechs and so on, and helping kind of rearranging the priorities within the bank build-up and rollout of open banking along those lines. So that is something that would tap into the cost and time element. And the final point here is perhaps working closely with the regulator, not in the sense as well only of compliance and adaptation, but we're blessed in the region with a regulator that keeps kind of an open communication and dialogue with the banks and with participants, and they're very keen on as well taking in inputs from the banking community. So working closely and sharing insights from business perspective, from banking perspective, from market perspective, what would be the priority in terms of, again, use cases and to the end customer, that would help the whole ecosystem create and leverage value. And then this way would there would be a lot of not time saving on the overall adaptation of the open banking motion, but it allows early wins and building momentum quite fast once the regulation is out.
Thank you. Read it from your own research in the region. You know, we talk about, is this, you know, recouping this investment made? So is this a revenue play, or is this a pure cost play for banks?
Yeah, I think there's a different answer if you're looking at individual banks versus the system as an aggregate. When I look at the banking system, say the GCC banking system or the Saudi banking system, I struggle to see why the revenue pool increases, unless you say, well, open banking goes to open finance, and then this allows us, particularly the better banks, and the banks often have stronger brands in this region than other financial companies. The stronger banks can then actually get more non-bank, whether it's funds, insurance, whatever. The revenue pool expands. That could be one example. But generally speaking, it's a chance for individual banks, if they get this right, to maybe expand their revenue pie at the expense of someone else. Clearly, if you're a fintech coming into this, this is pure revenue upside. Or if you're a consultant, without being cynical, people are going to make money in the first couple of years just getting consultants. Might be year 3 to 5 before the banks make any money out of this. Years 1 to 3 will be our friends in consultancy. But it's there are individual bank opportunities. More sort of broadly, I don't know if you can say revenue versus cost, because open banking is part of, as I said, open finance or an open API ecosystem, right? An open APIs, you know, and that in an open API world, does that mean the whole system just becomes more efficient? There's less friction. So open API should be good for everybody in the ecosystem. So can I have my cake and eat it and say it's good for revenues and costs?
It's a bit of a cop out, but I'll take it.
It is.
It is a bit of a cop out, but I think you're right. You know, consultants are going to make money out of this. Yeah, definitely tech consultants will make money out of this in terms of infrastructure architecture.
Sometimes the bears win, sometimes the bulls win, but the consultants always win.
We'll come on to this a bit later on, because I'm coming on to the killer questions are coming, guys. We've got about 2 or 3 minutes before we get into cracking some questions. I'm going to ask a question around really education now. You know, there was a recent Financial Times survey, it was really interesting. And it kind of, after the first year of implementation, said that only 25% of the public ever heard of the term open banking, and only 20% knew what it meant. So in other words, only 5% knew what open banking was about. So how do we make people, because it sounds, you know, definitely complex to the average Joe in the high street to say open banking. You know, you can get all your data and you can use it everywhere, and you're going to be able to do all this fantastic stuff. How do we educate customers to say this is a good thing when people are scared of sharing data and privacy and all that sort of stuff? How do we overcome that barrier with open banking? So I guess, you know, Mazen, do you want to lead on this one?
Well, I'll give it a try. It's a good question, frankly, and I'll be interested to as well learn on different perspectives. But I would start. It is definitely a serious problem or a challenge when particularly related to the, you know, data practices and data privacy. But I tend to think it's not a bigger problem on the larger scale, because open banking overall is not an objective in itself, but rather an enabler, right? So the end customer and consumer, I don't suspect would be very much interested or concerned with what's going on with open banking and how does it work and what have you. I think the banking community, the fintech developers, big tech is the concerned party here. Customer, end of the day, is really concerned and interested in, you know, the product, service, price, you know, and experience that they're getting out of this. And hence our focus on the jobs to be done framework, if you wish, and from there creating proposition and value to the customers and consumers, you know, corporate or retail, is where we want to invest in building awareness and building, you know, these propositions. Nevertheless, I would not undermine the privacy question, the data privacy, because it will come to the point where it touches a sensitive pillar of the whole core value of bank, which is trust, and building awareness with building confidence, number one, or reinforcing confidence of customer that the security and privacy tools and systems are all in place. The measures of protecting the privacy and arbitration or what have you, and the legal frameworks are all there. And building as well awareness to the customer on the behavior, on the right and best behavior in terms of data to share and revoke and monitor and manage. I think that is as well, we have a lot to follow on the lead of the regulators who have, despite the open banking movement, have been very active in the market in working with the ecosystem and banks to kind of spread knowledge, build awareness, and ensure awareness for security and privacy is there.
Good. Mike, any thoughts on that?
I think just echoing exactly what Mazen said, I think we will learn by the mistakes that were made in other markets. One thing our regulator is exceptional at is bringing the banks together and forcing us to collectively tell our customers about things, right? They will come and say, we're doing this, you guys are paying for it, here's the message, you're on board, right? There's just no negotiation. And actually, it's great, that they do that. It's a great, kind of, conscious that we have, but it's a really difficult, question. And I think that, from the conversation, I actually think I've got a lot of homework to do now this weekend. So thanks, Andy. Figuring out how we're going to do this, making sure that, when I look at banks, that no one has got that wow moment. So there's no wonder banks don't talk about it, because they've got no great use case to brag about. We've got some use cases, right? We've got some hypotheses and that type of thing, but we've got to think about how we execute it. But definitely, Sama, our regulator, is going to keep us honest.
It's going to keep you on. Coming up for the last killer couple of questions to you all, and Ronnie, you touched upon this to a little bit. You talked about valuations of fintechs and the white spaces where value has been created. There's some kind of interesting valuations of fintechs that are losing buckets of money but are worth much more than some very large banks with some very large balance sheets. So my kind of question is, when you bring open banking into the picture, you're going to see a blurring of lines of the way that you value banks in the future. Traditionally banks have been valued along the size of their future earnings and their balance sheets and so forth. So when you bring open banking or banking as a service model, we touched on that, and you blur the lines, do you see valuations of banks changing over the next couple of years? Because we're seeing very different forms of valuation. So as you blur that, Ronnie, do you see that banks will need to be valued in different ways?
So valuations of banks will definitely change, but not because of open banking anytime soon. So valuation of banks will move up and down. It's never the same over the next couple of years, driven by economic expectations, the level of interest rates, fear, greed in the market, etc. So it'll move. And there are some banks over the last 10 years that have seen significant increases in valuations in Asia, in the Americas. Sadly, in Europe, and particularly the UK, it's been the opposite in the last decade. In this region, in Saudi, in the UAE, where I'm based, actually the banks have some pretty good valuations in terms of equity market value. Not in terms of multiples necessarily, in terms of P or price to book, but the overall value is high, reflecting the fact that the profit pools in Saudi, UAE are actually quite high. So if you look at the biggest banks in Saudi and the UAE, the profits relative to the size of the economy or the number of people and the customers or number of employees, they're actually pretty good. I mean, that's another story for another day, maybe. Now, technology, the problem, I've heard a lot of bank CEOs say we're a tech company. And I don't know if Mazen and Mike say that. I hope they don't, because we're not a tech company. We're a bank. We're a financial services company. We use technology to deliver financial services, and open banking is part of that. The reason these hyper-growth tech companies trade on multiples of revenues is because they've convinced, rightly or wrongly, investors that they're building something new, and in the future, the revenue pool, the cash flow is going to be very large. And in the case of many of these internet companies, it worked out that 10 years ago or 5 years ago, they built client bases, and now they have huge cash flows. So they're some of the biggest companies in the world based on cash flow and revenues. I don't think banks will get a revenue cash flow based multiple unless they can show substantial growth. So growth is the missing part of the equation. As a CEO, you can stand up and say, I spent $10 billion or 10 billion reals or 10 billion dirhams on tech. Doesn't matter. That's just a cost. You've got to show that you've got growth, new clients, new ideas. And that's what the tech companies have delivered, whether they're in China or the US. We're more like the telcos than the tech companies. Let's just be profitable telcos that are future-proof. That's a pretty good ambition.
And that's a good segue into my last question. We're running slightly over. Here's the real last one for you guys. So there's going to be debates about how open banking will alter financial services. We've debated some of that today. Is it the wow moment? I think, Mike has said, is it just kind of regulation, is a regulatory must? But it's either going to result in either evolution or revolution. So kind of where do you stand on this? And where will your organization be in 10 years from now? And do you think it'll still be around? So who's going to take that first? So Mazen, do you think Riyadh Bank is still going to be around in 10 years?
I'll go.
Go on then, Mike. Go for it.
So look, I'm sure the CEOs of Blockbuster and Kodak had exactly the same gusto as me and said, of course we'll be around in 10 years. We're too good, we're too big to fail. But I think the difference between banking and those kind of operations, if you like, is that capital and size of balance sheet is really, really important. Ronit spoke about this earlier, right? It's a difficult thing to get into. It's a difficult thing to do properly, all for the right reasons. Neobanks are undoubtedly well funded, but they all focus on retail and the MSME type customers. None of them have yet cracked the digital needs of large corporates, and none of them have the capital or the balance sheet to support those types of very complex, large-scale lending. And this helps us today. All that said, I'm not that arrogant to think that we're immune. We're not. In 10 years, we'll be here. But I think it's going to be in a different shape. And if we don't start to change that shape now, then our numbers will look dramatically different and not in a better way. So it's
brilliant.
I'm getting the
wind up. Ronit, what do you think? Is Citi going to be around, or Riyadh Bank going to be around?
Yeah, well, the thing is, yes and no. I could make a very sweeping statement that we're living in really interesting times, as in we've already had huge change in the last 5, 10, 15 years. There'll be more. The key thing is, like, none of us wake up in the morning saying we want to do banking, right? Mazen, Mike, me, Andy, even though we're in banking, we don't wake up saying, I want to move money to someone, so I use a bank. I want to buy a house for my family, so I get a mortgage. Ditto for corporates. Whoever allows that banking service to happen will provide banking services. In the corporate space, I think it's still going to be largely banks. Unless DeFi really takes off, so decentralized finance, digital assets, we'll see. But I think it's going to be largely banks. In the consumer space, it's different, because what the non-bank internet companies have become really good at is they've become the gateway. So we'll still have banks. They might just be plugging into some of these interfaces. And because as we go more and more, our lives are lived online, right? Particularly our children's lives. They're lived on these tablets, on these devices, in these virtual worlds. Other companies are better at occupying those virtual worlds than us when it comes to consumers. So we might become like the Intel inside.
Fantastic. Look, a fabulous conversation with you all. I've absolutely loved it. Time has flown by, and we could probably go on for hours. And there's some big, big themes out there. So look, I'm going to hand back to to the guys that are organising the conference, see if we've got time for a question. We probably haven't because we've completely overridden. But thanks, guys, very much for the time and your company this afternoon.
Thanks for having us, Andy.
Pleasure.
But thank you so much, gentlemen, Mr. Marsden, Mr. Mike, Mr. Ronit, and Mr. Andrew. Thank you so very much for giving us a very insightful and engaging panel discussion, which I'm sure the attendees were really looking forward to. So thank you so much for that. We've unfortunately run out of time, so we can't take the audience questions. But it was a pleasure having you, and we look forward to hosting you soon at yet another Open Banking Summit. So thank you so much.
Thank you.
Thank you. Thanks.
Thank you. Bye-bye. Take care. All right, so from that amazing session, we move to our last session of the day, which is a fireside chat. So we have been having a very interesting day with highly insightful series of discussions and varied experiences, which are being shared from both global and regional perspectives. So as we come to the final session of the day, we are going to be focusing on the primary USP of open banking, which is its ability to elevate the customer experience. That is a vital factor for the banks to stay competitive in today's dynamic world of rapidly changing customer expectations. So we have with us Richie Santos Diaz, Head of Middle East and Africa for FinTech Times, which is one of the top 5 FinTech publications globally, which is very ideally placed. So we invite him to host this very interesting fireside chat and to introduce us to our interviewee for the day. So thank you so much for joining us, Richie, and it's over to you now. Hi, Richie,
Hello?
Are you here with us? Yes, we can hear you, but we can't see you.
Yeah, there's an issue with my, oh, there you go. Hi.
Okay, we can see
Sorry.
you. Hi, okay.
Yeah, so I exist, by the way, audience. So my name is Richie Santos Diaz, and thank you for the introduction. So I'm here today having a nice little fireside chat, or I like to call it Coffee with Richie today, featuring Gavin Payne from First Abu Dhabi Bank. And Gavin, before I hand over the microphone to you to introduce yourself, he is currently the head of Fabric. Fabric is a very interesting acronym, but it's the First Abu Dhabi Bank Research and Innovation Center. So Gavin, I want to quickly let you elaborate on your fabulous career.
Thank you, Richie, and thank you to everyone for having me today. It's a real privilege to be here, and it's also really nice to kind of have the closing session with you, Richie. We get to maybe do a little bit of a recap in a bit. Fabric, yeah, the FAB Research and Innovation Center. We are the innovation lab at the bank. A couple of things that we focus on. One of them is absolutely fintech. We would do a lot of proxying the fintech conversations in and out of the bank, helping the teams to better kind of understand the potential of fintech, and also reach out and explore and identify and qualify, and then kind of POC and eventually commercialize fintech into the bank. So lots of really interesting activities we work on. And then on a more kind of regional level, obviously plugged into all the kind of regulatory sandboxes and all the kind of ecosystem players as well. So basically just making fintech possible and tangible and real, and driving that agenda at First Abu Dhabi Bank.
No, it's actually great because, your involvement, all these panelists that have been speaking today, the wider ecosystem, it gives something like the FinTech Times to talk about, right? So it's really interesting to see kind of everything happening, and especially in the Middle East, in the Gulf Cooperation Council, and particularly today with the Kingdom of Saudi Arabia. So Gavin, I mean, throughout today's discussion with regards to, we know, for those that are tuning in. And by the way, for those that are tuning in, if you have any questions you want to ask Gavin after our fireside chat, please definitely shout it out on the message board, and we will try to accommodate your questions. Okay. So back to Gavin again. So Gavin, there's been various fintech models that have been emerging, and can you just kind of elaborate in terms of what you've seen, as a subject matter expert in this field, like what's been going on with those?
Yeah, look, it's because we've been doing this now for a couple of years, and open banking isn't something that's kind of so new and so shiny. We've definitely seen this balance of kind of banks and APIs and regulation and how it's playing out. We've seen a couple of key I think fintech models really start to emerge that we can kind of say, yeah, this is kind of making sense. We got this kind of traditional open banking where you have a bank, the bank exposes a little bit of information to a fintech, or as we call it, a third-party provider, but let's keep it fintech to keep it simple. Of course, the customer gives some form of consent, right? But what's interesting in this space, and I think is worth noting, is that who owns the relationship with the customer? It's the fintech, but who owns all the data? I would still argue it's the bank, right? The bank is giving a little bit of data to the fintech, but still the bank has all the data, right? The second model that we're seeing starting to emerge, I think this is a bit more tactical for all the banks in the region at the moment, while we're waiting on some regulations to kind of put some structure and some standards in place. But banks obviously realize the potential and how exciting fintechs are, and banks are reaching out to fintechs. Like we are at First Saturday Bank, and we're bringing them into the bank, right? And we're doing interesting stuff. We're improving our channels, our apps. We're doing some really interesting stuff with data. We're helping to process information faster. We're essentially building a better bank. And a lot of banks are playing in the space. And again, who owns the customer relationship? Because it's important. The banks still own the customer relationship, and the banks still own the data, right? The third of the four models that we see, and we touch on this in a number of the conversations today, is this idea of service banking, or banking as a service, or white label banking. I mean, choose your buzzword. There's plenty of them. But banks are giving a little bit of their feature set out to companies that are not banks. And some great examples of this. Apple have a credit card. Everyone might know that Apple has a credit card, but Apple is not a bank. The credit card is powered by Goldman Sachs. Uber give bank accounts to their drivers in parts of the US. They give them a checking account and a debit card. But Uber's not a bank, right? Uber is powered by a bank called GoBank. So this idea of kind of service banking, or banking as a service, and these new business models is really exciting. I'm quite excited about it. But again, who owns the customer relationship? Well, it's the Ubers and the Shopifys and the Apples. Who owns the data? It's the Ubers, the Shopifys, and the Apples. But also, who's well equipped to create awesome digital product experiences that customers want? Well, where that lies as well. So in terms of interesting disruption and what we're going to see in the future, that is quite interesting. And the final business model, I think, just to kind of wrap this up, is this idea of open finance, right? We've talked about open banking, exposing little bits of information. The idea of open finance is that lots of different financial institutions are exposing a lot more information. It's all available to be used. And it's still a little bit new, but again, who owns the customer relationship? Well, I think everyone has an opportunity there. And who owns the data? It's even too early to tell, right? So what we see these kind of four business models, or four fintech business models, and they're being loosely kind of clubbed together under this umbrella that is open banking. Yeah, and there's a lot of kind of techno babble and buzzwords in the space, and then we see this playing out in different flavors across over 40 jurisdictions across the world. So it's hugely fast moving, and it's very exciting.
And that was my next thing as well, is because they're all different, right? They, like you highlighted for sure, Gavin, that obviously data is a huge kind of like the glue in terms of all these different models. But what would be kind of like the core difference amongst these different models?
You know what, you just triggered me on something, and I might go off on a bit of a tangent, and let me go back to that. But on the point of data, I've noticed a bit of a thread through the conversation today. There's a kind of something that's been mentioned. I think we can kind of focus in on it, and that is that fundamentally, at its basic, open banking, Richie, it's not about banks. Open banking is not about APIs. Open banking is not about fintechs. Open banking is about the consumer, right? It's about giving us as consumers more choice and more value. And to your point on data, the world is waking up to the very strong and simple fact that data is incredibly important, powerful, and rich. And for a number of reasons, the world went banks. We're gonna start with banks, right? There's too much competition. We need to drive some innovation. Banks have lots of incredibly rich information on us as customers. We want to give consumers new ways to get better value from their data, and it's starting in banks. But make no mistake about it, this is going to happen, all over the world across multiple industries. The focus is on banks at the moment, and I think it kind of goes without saying in most parts of the world, and we talk about open banking coming to many different jurisdictions, but look at what happened in the UK and Europe. Banks were pulled kicking and screaming into open banking. I mean, open banking is happening to banks. It's not something we're choosing to do. What's happening now is, after a couple of years of realizing what it is and what it isn't, I think everyone across the entire value chain has realized that this is really, really exciting. There's all new types of business models and new opportunities, and we need to be kind of exposing. We need to be kind of playing in the space.
No, and absolutely agree, because I was living in the UK for many years before moving to Dubai when I gave up with UK weather. That's a whole different story. But in terms of, like that excitement of open banking at the time, it was huge, right? And I think, the conversations earlier today, many have referred to the UK as that, like you were saying. So, I mean, my Gavin, it kind of triggers me in my head now in terms of what model do you think is prime for superior versus intelligence?
Yeah, look, it's a good one, right? You talked about the UK, right? And if we look at what happens in the UK and Europe as kind of the genesis of kind of open banking, right? Because it's a bit more regulated and there's a bit more standards and structures around APIs and this idea of giving us as consumers more choice with our data, right? Because that's in place, you can argue that I would say certain parts of the world that are a bit more regulatory focused or regulatory driven are years ahead in terms of their APIs and their integrations and the potential to connect, right? So you could argue as well that this idea of open finance and the idea of getting more value from your data across multiple industries, clearly those parts of the world that are a bit more regulated are definitely better focused to move into the space kind of faster, right? But then I think if you reflect and you look at the fintechs in the UK, you kind of like, has there been massive disruption to fintechs? I think what we've seen is we've seen a number of fintechs come in and do one particular thing really, really well and kind of chip away at the banks. You've seen this back in the UK. So we got unicorns and we got like lots of venture capital flowing in to successful fintechs and payments. They just do payments. They have some interesting twists, wealth, lending, aggregation. They kind of do this one thing. So you could argue it's not massively disruptive or superior. It's tightly regulated, but I think what's to come and where they're geared up to head towards is going to be incredibly disruptive and exciting, right? And then I think if you go back to more in the US, which is the traditional kind of market model where, it's kind of market driven and there's less kind of standards, even though they're kind of working on it kind of informally. Because it's market driven, exactly as that. It's driven by the market. It's driven by what customers want, what customers need, and where the opportunity is. So in terms of features and functionality, we see kind of the US years ahead of maybe the UK in terms of where we are with features and functionality, because it's been left to them to figure out where the opportunity is. And it's a very interesting kind of interplay between the two of them and who's innovating now and who's driving great experiences now. But I think going back to the final two kind of fintech business models that we spoke about, and I was really pleased to hear Mike in the last session kind of talk about exploring these different types of kind of service banking models, and the partnerships with like the Ubers and the Shopifys and the Apples. That feels really exciting for something new to happen. I think I'm definitely going to keep an eye on that space. And the final thing I'll say as well in terms of real superior and real intelligence, and I'll caveat this, Richie, you're going to have to correct me if my facts are incorrect, but I've been doing a bit of research into what's happening in Singapore very recently. They have this kind of Singapore kind of Findex. And my understanding is like this central kind of digital hub where government services and banks are coming together. All the data is kind of centralized into this kind of open finance kind of data play, right? And what they're starting to do is they're starting to build applications on top of this now and making those applications available for everyone in the country. I think the first application was called My Money Sense. And essentially it's financial planning on steroids, right? Now, that is really, really impressive. And if you talk about intelligent and superior, I think absolutely that feels like where we should be going.
No, that's excellent. And speaking of steroids, I mean, now kind of migrating it to the banks.
We're talking about steroids.
That's
like a good segue.
The steroids energy, right? So kind of goes now to the energy of the banks, aka how do you think they're maturing to adopt to fintech and specifically, Gavin, with open banking?
Yeah, look, it's a good one. It's a good one. I think we've talked about it quite a bit today already.
I think so, yeah.
I'll give my spiel on it, but look, I think when I look at the maturity of banks in terms of fintech and open banking kind of comes hand in hand. I kind of think of it in kind of three kind of buckets of maturity. I think the first kind of playground or bucket, as we're calling it, would be just building this kind of ecosystem of partners and plugging into the fintech ecosystem, understanding, what's out there. The Fabric team, we manage a partner with an ecosystem of 14 kind of key players across the world. So if we have a particular kind of problem or challenge from teams in the bank, we can ping this network for access to kind of, high potential kind of fintechs. But plugging into the ecosystem, doing the accelerators, doing the pitch days, doing all the kind of the stuff that goes with that. I think that's the first area of maturity, and that's where a lot of banks will start off, and that's really important. You have to do that, right? I think that the second bucket, the second area is this idea of kind of path to productivity. Once we find a fintech, we want to work with them. How do we make that path to commercialize the fintech in the bank as productive as possible? No one wants to wait 6 months to do a POC to realize that the fintech isn't working out. I mean, you wasted so many people's time and burned so many bridges, and it's not fair on anyone, right? So that path to productivity, it's about managing your internal funnel of fintech activity and how you bring them in and manage culturally and help unlock the business value. It's about the internal kind of like, capabilities from having our API, rails in place for KitSat management. Are there like local regulatory sandboxes we can tap into to ease some of this kind of friction? There's a whole kind of piece there that's quite big. I mean, there's a lot to unpack, but I think I'm kind of making the point of how we technically bring these fintechs to life. And then I think the final bucket, and I think this is the elephant in the room, right? And I think this is the one that we need to work hard on, is that like we need to fix the internal, what I call the internal fintech culture. Teams within banks need to understand, open banking, fintechs, the potential, why it matters. I think it's incredibly important. What we say is teams in the bank need to kind of reach for fintechs. They need to learn and be educated. If that doesn't happen, well, what's the point in having APIs and what's the point in having pitch days? Like if the internal people aren't finding problems that can be solved with fintechs and reaching for fintechs on a cultural level, I think it's really important to make that happen. And look, what I would caveat that with strongly is like, look, I mean, this open banking thing is still relatively new. I find it very overwhelming personally, and I think it's okay to be overwhelmed by open banking. I mean, you're talking about all this interesting kind of geeky kind of tech stuff and APIs and security, and it's really important, but it's like it's heavy, right? And then you take regulations, and it takes a certain flavor of a person to be passionate about regulations, right? And it's heavy and it's deep and complex. And then you take the idea of fintechs and new business models and entrepreneurs and venture capital and all the kind of fluff that goes with that, and we smash it together, and here's open banking, and by the way, it's happening in different ways across the world. Good luck. So look, it's overwhelming, and I think it's okay to be overwhelmed. And I would add that's why events like today are like super important. We have to have these dialogues, we have to have these conversations, we have to learn and communicate as an industry and as an ecosystem.
Absolutely. And even like there's a stat where I believe it's the UK or the EU, but I think the UK, where I think 30% or shy of that is hesitant to actually give data to basically the open banking stuff, because again, it's like you said, you have to educate the audience in terms of what it is, and then obviously you have to persuade them too that actually open banking is all right. It's not, and we're talking about the UK here. We're not even talking about the GCC or Saudi Arabia. So you absolutely hit it on the nail. And just bearing in terms of time.
Trust has come up time and time again, right, Richie? I mean, we spoke
exactly.
About this. People have to trust, and that's where the value of kind of regulations comes in. And again, go back to the Singapore example. The way you log into these apps in Singapore, you log in with your Singapore official digital identity. So therefore, you kind of have this inherent trust that this is okay. And there's many ways it's playing out. It's a big topic. Yeah.
Absolutely, and Singapore is definitely a leader in many ways with the space. And speaking of the topic of trust, do you trust me to let me ask you like a final quick question, and then if there's any questions for the audience, it's regards to kind of wrapping up today's summit, Gavin. What kind of thoughts you had in terms of something that you haven't covered yet, or maybe you did, in terms of this kind of subject today? I mean, is there anything that kind of struck you?
Yeah, look, in terms of kind of some final thoughts, I'll echo some of the conversations earlier, because I mean, there's a lot of thought, particularly in the first section. I think the first meet with the team this morning about how ready we are for open banking, and it's a really good question. And the idea we spoke about that, the fintech culture, and talent, which is important, right? But I think, look, you got to step back and kind of put some perspective on this. Even though open banking regulations are still maturing in the region, we see banks aggressively moving towards these different fintech business models and playing in this open banking space. We see banks everywhere creating these APIs and consent management and talking about these new business models, getting serious about fintech adoption. And we see all this kind of burst of activity around sandboxing and regulatory sandboxing and kind of reducing the friction of banks getting that path to productivity. And that's fantastic. And I think as a region, we're diversifying from oil. There's a lot of capital and support for entrepreneurs to drive kind of the SME ecosystem and the economy. We see that everywhere. It's hugely important. And I think the whole thing is compounded with like very big, Saudi ambitions, thinking around, data and digital economy and, smarter cities. And we've had a little nudge from COVID as well. I mean, the pandemic's been a great driver for digital transformation. And look, I think then we also at this time, we can sit back and we have very clear examples of what's worked in many places across the world and how things are shaping up. And we can take some inspiration and some context from that. So are we equipped for open banking? I mean, yeah, it sounds like we're in a pretty good place. Of course, it's going to take time. Of course, it's going to be slow and steady, and we've got to figure out a few things. But I think from where we are right now, I think we're in a really healthy place. And I'm very excited about what's to come, not just in this kind of open banking space, but again, as we as consumers use data more and more, in the entire ecosystem across the value chain, that to me is going to be very, very interesting to watch.
No, and you're absolutely right, Gavin. I mean, I think, putting my economic development hat on right now is a lot of this, including fintech, including, the financial services industry, a lot of it is coming from the top, right? In terms of national economic development strategy diversifications. For those who have been living in a cave, but it's not, you've heard of Saudi Vision 2030, right? It's a lot of this coming from the top, and financial services, digital transformation is a huge part of that. And that's across wider, the wider Middle East in the likes of the UAE, Qatar, et cetera, where this is a heavy kind of emphasis. And especially, like you said, the C word, COVID, when that happened, it kind of further accelerated that for sure. I think, just to kind of wrap it up here, I want to give it to the audience now to kind of ask you a few questions in terms of the little fireside chat for today. So the first one, it's more of a comment, Gavin, but let me just read it out to you. So somebody in the audience said, I agree with Gavin about the value of data.
Good start.
Because there was a time, good job, Said. Because there was a time when organizations were taking decisions based on facts, but now it's all about data. So yes, data is now becoming the important asset for anyone who wants to do well or enhance the services. Do you want to comment, Gavin, about that statement?
I think Said is bang on, right? Data is important. We've been saying it for years. The fact that this is becoming a much bigger global key topic about this is your data and you should be able to control it and use it in any way you want. We'll put some rails in place to make sure you're not taken advantage of. That changes it. That's a paradigm shift for how we think about business, right? And it's going to be a fundamental change across many industries. It's just starting in the banking space.
Excellent. So the next question is, what's the role of organizations when it comes to digital transformation?
What's the role of organizations? Culture, I see here. When
culture,
it comes to
exactly. Culture, yeah.
Culture's a big topic, right? But let me try and break down go beyond the buzz a little bit on culture, because I believe culture innovation is about culture, right? It's very important. I think, we can talk about, technology change and APIs and moving the cloud. We can talk about restructuring how we, build great digital products and kind of moving to agile and, delivering these kind of factory style implementations, we talk about how we design products, using design thinking with a focus on the customers, right? We talk about, different types of, skills that we need in-house to support this new kind of digital world around us. But fundamentally, like everything comes down to the people that power that change, right? So people are responsible for powering all of these changes and all of these things that need to happen. So it just comes down to culture. Everything is about people. Everything's about culture and how we collectively make sense of this. And I think that's internally, but then I think, Richie, you touched on this as well, and a few of the guys earlier on, is that the external culture of the adoption of open banking on a cultural level, there's a big, huge, huge mark around trust. And I think, as we open up APIs and data, you know, it sounds kind of cool at the moment, but there's definitely going to be some stuff to keep an eye out for the future. I think trust is very important.
No, thank you for that. And I think that wraps up the session. And before we end it, I just wanted to sum up quickly that I think, you know, Gavin, as we were talking, you and I today, and obviously throughout the discussions earlier today with the summit, I think, you know, number one, like you said, trust is very important, both internally and externally. I think the second thing as well is digital. Digital is here to stay. And I think the third aspect of summing up everything is wider economic development plays a huge part in banking, right? So I just wanted to say thank you so much, Gavin. And thank you again to everybody tuning in. And I'm going to hand it back over to the host.
Thank you, sir. Cheers.
Thank you so much, Richie, and thank you so much, Gavin, for that amazing session. I think that made up for a great closing session. So thank you so much for that fireside chat. It was a pleasure hosting you, and we look forward to seeing you again soon. So everyone, with that, it's a wrap. It's been a brilliant and delightful series of discussions what ensued here today. So to conclude the event, I'd like to invite the event producer, Sarah Ben, to give the closing remarks for the Open Banking KSA Summit. Over to you, Sarah.
Thank you, Roma. So we have come to the very end of the first edition of the Open Banking Summit series with the culmination of the KSA Summit. So we hope the summit has placed the Saudi's banking sector few steps at least closer to successful open banking adoption and implementation, especially as SAMA aims to go live with the regulation in less than a year from now. Well, today we heard from the CEOs of Saudi British Bank and Standard Chartered Bank Saudi on how the respective organizations are preparing for the regulation implementation, how open banking is another step towards developing Saudi's financial sector under the FSDP, and also how open banking is a major move towards realizing the kingdom's ambition of becoming a fully digitized economy by 2030 as placed under the Vision 2030. We also heard best practices from the UK, the challenges and benefits associated with the regulator-led model, what worked for the UK, and how can it be adapted to suit Saudi's business environment. We then heard about Standard Chartered's rollout of open banking on a global context and best practices from Singapore's open banking model that could be applied to the region. We pinpointed on the various challenges the Saudi region is facing for successful implementation and the best strategies to combat these from among the most acclaimed fintech veterans from the region. And we closed the KSA Summit with a fireside conversation on leveraging open banking's biggest USP, which is to provide superior customer experience and thereby improve the competitiveness of the banks in the region, which is a crucial factor considering Saudi Arabia, and in fact, all of the GCC is heavily overbanked. The Open Banking GCC Summit, which took place earlier this week on Monday, also addressed best practices and strategies to adequately prepare and position the GCC for the upcoming regulations. This was done through a keynote by UK's OBIE, which is the Open Banking Implementation Entity, an exclusive CEOs panel, which saw, the Standard Chartered CEO, a prominent regional bank, Commercial Bank of Dubai CEO, and recently launched SAND, a complete new bank. The CEO of SAND joined for a conversation where, and there were a couple of other very important discussions with an interview with the Chief Information Officer of Emirates NPD, which underwent one of the biggest digital transformation programs globally. Followed by a panel of experts who brought in best practices from across the world. Well, we hope the Open Banking Summit series, which focused on the GCC as a whole, and we had a day dedicated exclusively for Saudi, has taken you one big step closer to implementing or to successfully adopting the upcoming open banking regulation. We're keen to hear your experience of the event. Kindly fill the feedback form so we can improve the upcoming editions for you. You can find the link to the feedback form in the chat window below. Before I conclude, I would like to thank our brilliant panel of speakers who joined us for today's summit, as well as for the GCC Summit, for their time, for the invaluable information and insights they shared with the region's banking professionals. Thank you. I would also like to thank our banking association partner, Saudi Banks, for the KSA event, and again, Saudi Banks, which was an overall partner for the GCC event, along with Bahrain Association of Banks and Oman Banks Association for the support they rendered in the past months. With that, we conclude the Open Banking Summit series. Thank you once again to everyone for joining in. See you at the next edition. Thank you.